You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 15th day of October, 2015. Happy Thursday. Let's take a quick look at the numbers. These are cash markets. S&P 500 is up 6.5. Dow Jones Industrials are up 44. NASDAQ is up 21, and the Russell 2000 is up less than 1 point. So nothing real dramatic there. Just kind of a sideways average sort of a day. Crude oil is down $1.32. We had crude oil inventories this morning. Don't know how the numbers came out. Michael will tell us when he comes on. Gold, again today a bright spot, up $7. Slow and steady as she goes. Now, Asian markets today, we have a bit of a different story. The Nikkei is up today 205 points, which is more than 1%. Shanghai is up 75, and that's more than 2%. And the Hang Seng is up 448, and that's exactly 2%. Last but not least, we turn to Europe, and we see the DAX is up 1.5% or 148 points. FTSE is up 69 points, and the CAC 40 is up 66 points, putting both of those up more than 1% on the day. So we have a bullish day overall. Things are looking good. In fact, the only red on my screen would be crude oil, natural gas, wheat, German and Japanese 10-year Treasury notes, U.S. 30-year green, and the VIX. The VIX is red. So there you go. Those are the numbers. Mike Reed's going to join us tomorrow. By the way, while I'm thinking of it, at least that's the plan. We have a hard time getting our schedules to mesh. Tomorrow at about 12:40 Eastern. Okay? Show starts at 12. Michael's done with the recap. And then Mike Reed and I from Trade Stalker will spend about 20 minutes talking, and then David from Page Trader will come on, and then we'll do the Concierge Trade Alert recaps tomorrow. Today, we will follow the somewhat normal schedule. Michael will come in. He'll do a recap of everything that happened in the live trading room today. The good, the bad, and whatever got away. We don't sweep anything under the carpet. We just call it as it is. You know, however it falls, that's how that cookie crumbles. So, when he's done, I'll be back with our good word for the day, and the Concierge Trade Alerts from last night, and the free trade from today. Snuck one out at, now, I didn't sneak it out because it said on the website, on the free trade portion of the website, said the next trade will come out Thursday morning at 11 a.m. Eastern, and it did, to the tick. Actually, I might have been 2 ticks late, but it was out there. We'll talk about that. Of course, we'll go to Vegas. We'll talk to David for his forecast from the Edge. And today is every other Thursday, so our every other Thursday friend, Ed Corey, our resident Elliotician and former commercial crude trader, he will be with us at 1:30 p.m. Eastern today. 2 of the biggest IPOs of the year so far have flopped, and it's sort of ruined the market for everybody else. The window for initial public offerings in 2015 may have just closed after 2 of the biggest initial public offerings, or IPOs, to hit Wall Street this year flopped. The 2 biggest flopped. First Data priced its stock at $16 a share on Wednesday, below the anticipated range of $18 to $20 a share, and the shares have been struggling in early trading today. Albertsons, meanwhile, was forced to hold its IPO off after bad news from rival Walmart spooked investors yesterday. Oh, let's take a peek and see if Walmart recovered. Let's just do that real quick, because I haven't looked at it today. I buy groceries there. I just don't buy stock there. Walmart, there we go. I mean, yesterday was the big crash and burn day. Whoa, 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 whoa. That is bad. Okay. So from 66 down to 59. It could be worse, right? And by the way, the Waltons, they aren't hurting for money. And they are now paying their employees a more livable wage. So, well, all things considered, that's not too bad, right? And so, you know, maybe we bounce around the bottom here for a couple days, And then the world realizes, well, whatever, people are still going to go to Walmart to get big screen TVs and bananas and soda pop and beer and Levi 501s and hush puppies and kids and skateboards and bicycles and car batteries and tires and their oil changed, and I could go on. But I won't, because I'm sure you've probably been in a Walmart, the superstore. So it takes a drubbing. All right, now the big competitor in my mind to Walmart is Amazon. How's Amazon weathering this Walmart fallout? Not too shabby, okay? So we come back to the 50-day, and I say again, not too shabby. I'll show you a pretty picture. Everybody always loves a pretty picture. I'll be showing it to you later in the show anyway. But yesterday, the free trade, which actually went out Tuesday night at 7 p.m. Eastern and triggered at 8 a.m. Eastern yesterday, from the trigger to the swing high of the day was 35 ticks, I believe it was. And 32 ticks is a gee whiz. $1,000 per contract per day. Now, there was an initial push and then a drawdown and then a push and then a pullback. And so, again, if you're going to trade the 2420 blueprint and use an 8-tick hard stop, you're going to come in here, you're going to make your $100 per contract per day and go. If you're going to reach for the stars, okay, you're going to have to position your stop like down here, the way they teach you in the technical analysis books, or you're going to use the range chart that we use in the live trading room, and you're going to take multiple stabs at it until you catch the swing that actually runs. See? Two ways. If you become a partner, by the way, we'll teach you both ways. Which reminds me, there's a partners meeting tonight at 9 p.m. Eastern. You really should be there if you can. If you're a partner. If you're not a partner, well, check your inbox. If you've been on the trial, Michael has sent you an email inviting you to become a partner. Become a partner so that you can be in that meeting tonight. If you didn't get the email or you'd like the email, email us, support@cfrn.net. You can call us at 949-42-EMINI. Unfortunately, we can't answer the number or the line during the live broadcast, but as soon as the broadcast is over, we'll call you back. So if you call and get voicemail, leave a message, and then a real person will call you back. Really. True story. Now, back to the failed IPOs. Some are already pushing back their own plans. Neiman Marcus recently decided. Now, these old school names that have been around forever, like Neiman Marcus and Ferrari, Albertsons. Suddenly, why the IPO fever? I'm not sure about that. Neiman Marcus decided to hold off on its IPO after filing for the sale in August in the wake of market volatility. This is bad news for anyone planning on an exit, like the private equity backers of Wednesday's flops, and for Wall Street too. As it is, proceeds raised in U.S. IPOs are down more than 44% from last year, and the number of deals is down by about 20%. There's one more big deal on the horizon. We talked about this earlier in the week. Ferrari is poised to raise about $900 million in a sale next week. So that means they can buy, about 500 of their own cars. Payment processing company Square. Now that's a company I'm a big fan of. Jack Dorsey who is the CEO of Twitter, is also the CEO and founder of Square, filed for its IPO on Wednesday, but that filing is preliminary, so the share sale could still be months away. Square, what a clever little device. It's a square, plastic square, and it's got a little headphone jack that you stick into it's got a headphone, whatever you call it, and you stick it into the headphone jack of your iPhone, Android phone, your iPad, and suddenly you turn your phone into a cash register. You can, if you're holding a yard sale, you can take credit cards. You can swipe and go. Swipe and go. You just have to be careful because somebody might come to your yard sale that you don't know, and they buy products with a card that maybe it's theirs, maybe it's not theirs, and then all they have to do is contact their company and say that the merchandise was faulty or defective. Well, yeah, it was from a yard sale. You bought it out of the man's driveway. But if they report it to the credit card company, then it's a whole mess. So while it makes it very simple for anyone to have a merchant account, it used to be incredibly difficult to get a merchant account. I mean, your credit score had to be top notch. I mean, they really, it was like an inquisition to get a merchant account, to get one with a fair rate. There's always been the vultures out there that would charge you these outrageous fees and hold back 50% of your money. And to get a legitimate deal, you had to have a good relationship with your bank, good credit score, be a fine, upstanding young man, and all of that. And so we've had a merchant account for many years, very thankful for that, with a good rate, a good company, and all of that. But Square and some other companies who have modeled their business after Square are really kind of changing things, you know. Pretty soon the guy on the street will say, "Hey man, can you spare a buck? Sorry, I don't have any cash on me." And he's going to whip out his phone and say, "I take Visa and MasterCard." You think I'm kidding? That day is coming. Oh, that day is coming. It is. Wait and see. Okay. So this is the S&P 500 E-mini Futures. If you can't see the chart I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click that big microphone, follow the instructions, and within 30 seconds you'll be registered through the end of the month, and you'll be able to see the charts. Once you're registered, you'll get an email every day telling you, don't forget, the show starts at noon Eastern, and you'll be able to join the show with one-click access. Now, you'll be able to see the charts and ask questions. Okay? If you have questions about a particular market, something you want us to look at, something you want to share, get off your chest. I don't always have the opportunity to repeat everything that everyone types in, but I try. I really do. So I never shun anyone intentionally, even if we disagree. In fact, if we disagree, that's great radio. So I drew this little box earlier in the week because that was the range we found ourselves in. I mean, this is Friday, so the range kind of set itself up on Friday. Then we finally broke out to the downside. I said, now what we got to watch for is if we break to the downside, do we come back and test the lower end of the range and then get a drop? Well, we did. And then we came back and tested the lower end of the range again last night and got a drop. So, kind of quiet. Oh, when all's said and done. But the other markets, we have had some volatility in the other markets. And we'll be taking a look at all of those a little later in the show today. And of course, we have more headlines, and we'll cover those later in the show as well. Stuff like, I don't know. Theranos is still struggling to make its revolutionary new technology work 6 months after investors pumped $9 billion into it. Short seller Carson Block just dropped a blistering letter accusing a company of corrupt payments. We'll find out what that's all about. Donald Trump's poll dominance in 2 key states is mind-blowing. Okay. And John Paulson is getting smoked. I don't know. Roll your own. McDonald's franchisees say that this all-day breakfast thing is a nightmare. See, they've had to do this to compete with the guy in the box down the street, Jack. Yep. And former U.S. military intel chief, the Obama administration loves to find a guy in the middle of the desert and drop a bomb on his head. Oh, and Netflix earnings out today. I think they're down about $9 a share, or maybe they came out yesterday afternoon. Netflix CEO explains the simple reason his company is succeeding over traditional TV. Maybe he hasn't looked at his share price today. Let's have a gander, and then we'll go to Michael straight away. NF, and you know this is one of my favorite companies. Not because I own the stock, but because we watch the heck out of it. Netflix. Yeah. Okay. So now somebody the other day shared that they had done a 7-to-1 stock split a while back, I believe it was. And so on earnings, I'm assuming this is on earnings news, they're trading $101. That could just be a real nice bargain. Okay. A leg and a retrace, and a leg and a retrace, and a leg and a deeper retracement. Until we take out these lows, it doesn't become a reversal. Okay. So a pull back above this 50-day moving average, and hey, let's get long Netflix. See where it goes. All right, Michael, if you're ready, sir.
I am ready.
Okay. How you doing?
I'm all right. I am all right. Hang on. There we go. Grab these charts. Right over here. Yeah, we had a pretty good morning. $520, I think. Something like that.
Better than Netflix. Yesterday you did better than Walmart, and today you did better than Netflix. So that's good.
Yeah. Yeah. Well, you know.
We're blowing these high valuations out of the water.
But when they're doing so horribly, it's not hard to do better.
We do it with a $400 computer and a SIM card. Yep.
Yep. It's pretty simple.
All right, buddy. I'll hit mute, and it's all yours.
All right. Here we go. All right. Good afternoon, everyone. Today is Thursday, the 15th day of October, 2015. We're halfway through October. Okay. So today we made 4 ticks profit in soybeans, 3 ticks profit in the Russell, 16 ticks profit in crude, 17 ticks profit in gold, and 10 ticks profit on the ES. Today it took us 21 minutes and 6 trades to get to our goal for the day, and the goal at that point was $100 a contract. Today we took a total of 28 trades. All right. So far on the month, we are halfway through, and we're at $4,237.50. These last few months of the year, the last couple of years, turned out to be pretty good ones. I think our highest month of the year last year was October. I believe we were up at 12 grand on that month. Let me just go take a quick look. Yeah, October was 12,362. November 74.80. December was 10,000 last year, 10,700. Well, we're halfway through and we're at 42.37. That's some pretty good days wrapped up in there. Yesterday was 700 and something. Today's 500 and something. Anyway, that's over 11 trading days. 42.37.50 over 11 trading days, averaging $385 a day. Let's see. On On the month, with an $8 commission, the net profit would be $2,309, and with a $5 commission, the net profit would be $3,032. Okay. Now, if you look down here, you'll see that over 193 trading days so far this year, we're up $52,150 a contract. That's averaging $270 a day, $270 per day. Okay. Now, if you have not taken a free trial with us, shame on you. No, if you have not taken a free trial with us, just go to CFRN.net in here, and right over here in the right-hand column where it says register for a free trial, put in your name, put in your email, click register for a free trial. When you do that, you'll be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click the confirmation link, you will not get the free trial. Okay, we need you to click that confirmation link because that's when we actually know you took it. All right. All right. Well, let's start off here. We'll just go left to right like we read. Okay, we'll start off with the gold. Gold today we ended with 17 ticks, but let's get back to where we started on that bad boy. Here it is. All right, we started out by missing a couple of trades right in here. This one would have been profitable. This one would have been a break even. Then I missed another one right here. We finally got a trade going right here. We took 10 ticks profit on that one. We got another one right here, 10 ticks profit on that one, putting us at plus 20 on the gold. All right. It started to move down over here. The black step line had crossed up above the BBC right there. That's why I didn't take the short in here. I could have taken a short right down here, but I missed it, and I missed that one too. Changed direction, started moving up, and right in here, we stopped out. Minus 8 ticks. That brought us back down to 12. Okay, we got 1 tick profit there, bringing us to 13. Break even there, mistrade there, and 4 ticks profit right here, bringing us to plus 17. All right, so after that, let's see, we're at plus 17, and that's where we ended the morning. Now look during the break here. Yeah, I'm just not seeing anything. We didn't have a single trade here during the break. All right, that's not uncommon for gold during the break. It did move around quite a bit during the break, which is uncommon, but it's not uncommon to not have any more trades after the morning session on gold. Wow, the Russell had some nice movement in here. During the break, the Russell had a short there, 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 there. Then it had a long trade there, 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 there. So Russell had some nice movement during the break. For us, sadly, we took a lot of trades on the Russell, but we didn't end up with a lot of profit. First one was a break even. Then we got in here, we took 5 ticks profit on this, and 4 ticks profit here, putting us at plus 9. That is where we got our goal for the day. Then we're break even there, and break even there. Missed a trade there, and we stopped out on this one, so that put us back down to plus 1. Okay. Yeah. Then we had a break even. I missed a trade here and there. Break even there, break even there. Missed trade there. Missed trade there. Then this one we finally got 2 ticks profit on, putting us at plus 3. And we finished off with a break even right there. Okay. That is today they were. Look at that, John. Up and down, up and down. Nice volatility. Nice volatility during the break. Crude oil. Let's see. Let's look at crude today. On crude, we had plus 16 ticks, and most of that was in a single trade. Okay. We started out right in here by missing this first trade right here. That would have given us our goal for the day, but it happened in like a second. Seemed like from right here it went from 34.30 to 34.31 right up here. These 3 bars happened in 1 second. I remember I was just saying it to everybody, and I looked over to my left to put the trade on, and by the time I did, it was all the way up here already. The next trade we took was right in here. We got a break even on that. And then we took a short here with 1 tick profit. Then we stopped out, and we're at minus 7 right there. Looks like I missed a trade right here. Missed a short trade right in there. Break even here, missed a trade there, break even there. And right in here I got 17 ticks profit on this trade. This was after the crude inventories came out. I got 17 ticks profit on that, putting me at plus 10. Okay, and one more trade in here was 6 ticks profit, putting me at plus 16. And I believe that was it for the trading that I did. Now, there was a short trade right here, and here, and here, and a long trade right there during the break. I gotta draw a trend line to see if this is one right here. So you draw the trend line down the body. Oops. Down the corners of the body. Like that. And no, there was not right there. So you would have drawn it over here, and it would have been right there. Okay, long trade right there. Nothing there, there. Long trade right here. And there. And a short right in there. Okay. That is what we did on crude. We ended with plus 17 ticks. I'm sorry, plus 16 ticks on crude oil. All right, the soybeans, I believe we had 2 trades. We had one break even here, and we had one with 4 ticks profit right here. This thing took forever. We got short over here at 10:40, and we got out of it over here 40 minutes later. That took forever. All right, during the break, really not much we could do there. Nothing, actually, that we could do there on soybeans. So we ended with plus 4 ticks on the soybeans. All right, on the ES, we had... Hang on. On the ES, our first trade on the ES was right in here. We took 2 ticks profit on that. And then we had a break even there, a break even there, a break even there, and 8 ticks profit on this one. Okay, that put us at plus 10 on the ES. Since then, during the break, let's see, there was nothing we could do in there. This was a momentum short trade going into the dynamic support, so I wouldn't have done that. Okay, change your direction, and you could have gotten long right here for this move up during the break. All right, that was all we had there during the break. For the whole thing there, actually. That was it. Okay, so that's not what I need. This is what I need. All right, so to take our free trial, if you have not taken a free trial, go to CFRN.net in the right-hand column where it says name, put in your name, where it says email, put in your email, where it says, then click register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you won't get a free trial. Yeah, something like that, John. Click on register for a free trial, and you'll be sent a confirmation link. You must click on the confirmation link. Okay. Now, our spreadsheet. John says it was 535. I thought it was 525. Okay, well, I will go with what you say. We can count it up again when I get down there. Hang on, let me go down to the bottom. Okay, so we had 4 ticks in soybeans, that's $50. We had 3 ticks in the Russell, that's $80. We had 160 on crude, that gives us $240. We had 170 on gold, that gives us $410. And we had 125 on the ES. You're right, John, that gives us $535 a contract. 21 minutes and 6 trades got us $200 a contract, and we took a total of 28 trades. Okay, so on the month we're now up $4,237. That's over 11 trading days, averaging $385 a day. On the year we're up $52,170. That's over 193 trading days, averaging $270 per day. Okay, that is where we stand on the day, on the month, and on the year. That, I will stop the recording, and if you're ready, Phoenix, we can go back out to you, and I will slide this off.
Yeah, I will be here in just a second.
Okay.
Un momento. You mad at that keyboard?
No. I'm mad at the person I'm sending an email to.
Okay.
I have been for
Right.
about 2 years.
Okay. Well. Okay.
All right.
I'm just trying to get my ducks lined up here.
Okie doke.
It's, it's kind of like herding cats, lining up ducks. It's not the
Yeah.
easiest thing to do.
Yeah, at least. Well, the little ducks tend to line up right behind their mother, and cats, if they're hungry, tend to go to food like a herd. I've noticed this because Jada has a herd.
You've become a cat person.
Yeah, she's got 4 of them.
Okay. Let me just make a final notation here. Cross the I, dot the T.
All right.
Okay, so for those of you that took that free trade today, I'm very happy for you. Glad we could be of service.
Did I star that thing you sent to me yesterday?
Now, somebody sent me an email that said, hey, I didn't see the changeover. You probably have to refresh the page, I'm going to guess. Even though it appears instantly, you probably still have to refresh the page so you can see the instantness of it all. I'm guessing. These technical things are way over my head. So. And pay grade. Yeah, I better get these charts and get that keyboard from you before you hurt somebody. Alright. Mind Ed Corey joins us today, 1:30 p.m. Eastern. He is our resident Elliotician and former commercial crude trader. You and I trade contracts of crude. This guy used to trade ship loads. That ship as in boat, ship loads of crude. So get your questions ready. Okay. And okay. So that brings us back to where we want to be. Okay. All right. So I guess best place to start would just be to dive right in. Well, I'll tell you what. Tell you what we're going to do. We'll peek at the free trade, and then we'll do our good word for the day, and then we will do all the concierge trade alerts, and then we'll go talk to David, and then we'll go talk to Ed. And that's the deal. Okay, so let me pin this up. And do I have my page open? I do. Okay. So today, those who've registered and were able to go here knew that today, because it said it right on the page, the next free trade will be released at 11 a.m. Eastern on Thursday. And I think I was about 2 ticks of a second late. My apology. But the deal was to consider being short below 1134 or long above 1148. I've explained to you multiple times, it's not that I don't have a bias or an opinion, or I don't think I know which way the market's going to go. I just know I've been wrong before. So even if I think the market's going to fall, and I'm giving you my very best short trade opportunity, What if I'm wrong? Why not go ahead and give you my let's just pretend for a moment that I am wrong. And that's really hard. I mean, I have to put on makeup and everything. But I pretend that I'm wrong, and I give you my very best long trade. There's no harm in that, right? And it protects you. So, if we meander over here, 1134 is going to be right about there. There. No there. No there. No there. Gosh. I will draw a straight line or the show will be halted.
They have a straight line thing right there.
The markets were halted today because Dwayne couldn't draw a straight line. Okay. Yeah, they do have a horizontal line tool. You're right. I know. But yeah, you're right. All right, short 1134. So, swing low on this was in that same hour. Now, I like to give them to you, you know, if possible, a couple hours before the trigger. But I knew that today, being that I was giving it to you intraday, chances of it triggering sooner than a couple hours. The first one, it took, I don't know, like close to 12 hours to trigger. The second one took, I think, 13 hours to trigger. This one triggered in the same hour. Okay. Short 1134. Now the swing low was 1130.50. Okay. Swing low 1130.50. Okay. Now the Russell pays $100 per point. The S&P pays $50 per point. The S&P has 4 ticks to a point. The Russell has 10 ticks to a point. The S&P pays $12.50 per tick. Russell pays $10 per tick. So, from 34 down to 31, that would be 3 points. But we got 2 more ticks. So really what we got was 3.5. So really what we got was 35 ticks. And so really what it amounted to was $350 per contract. Okay? $350 per contract. If, now here's a huge if, monster if. You ready for this? I cannot get you out at the exact low. I don't have the ability to do that. Why? Because I can't predict the future. Here's what I can do, and what Michael and I do together, and this is what our whole mentoring program and partner workshops and all of that stuff is about, is we teach you how to enter a trade, utilize a hard stop, how to set a daily goal, and then as you mature and grow out of, you know, perhaps the $100 per contract per day, which quite frankly, no reason to ever do that. The smart thing in our book is to just add the contracts and stay with the $100 per contract per day. However, if you want to go for big game, you can, and we will teach you how to trail your stop. And so trailing your stop means you're not going to get out at the exact swing low and make $350 per contract. See, for a 10 contract trader, this was a $3,500 move inside of an hour. That's if they knew the science or the magic of getting out at the exact swing low. We don't have that. Okay? But if you're trailing your stop, and depending upon how closely you're trailing your stop, you will get stopped out with profit, okay? So come hang with us. If you've never taken the trial, get busy. If you've been on the trial and it's now time to get with the program, make sure you look at that email that Michael sent you. And if you were on the trial and didn't get an email from Michael, that's because it wound up in your promotions folder, your bulk folder, your spam folder. You know, different email clients hide things in different places. But most email clients do allow you to search for a particular address or topic. So in your email client, if you simply search for support@cfrn.net, your emails, when you send an outgoing, does it default to support, Michael, or does it default to tech?
Tech.
Oh, okay. So in this case, you would search your email client for tech@cfrn.net. Okay. Really, what you can do is just go to your email contact list and add the @ cfrn.net. So this way, if you got something from support@cfrn.net, straight to your inbox, tech@cfrn.net, straight to the inbox, even dreeves@cfrn.net, straight to the inbox. Also, because we use Citrix to send out the daily reminder emails about the radio show and the live trading room, add as a contact at citrix.com and also at citrixonline.com. This way, no matter what we or those we hire to send emails to you, no matter what any of us send, you'll get it. And some email clients even allow you to assign priority to a particular email address or domain. You can say it's important, it's very important, it's earth-shattering, you know, however you want to label us. Make sure our emails go to your inbox, okay? Okay. And so if you can't find it, just email support@cfrn.net. I want the lowdown, I want the skinny. I want to know, please tell me how I can become a partner and be in the partners meeting tonight. There's still plenty of time left in the day. We can make it happen. I'm going to share with you very quickly, if I might, if I can find it. I probably can't, and so that might be a sign I shouldn't share it with you, but I'm gonna. I sent out an email yesterday. It had 5 paragraphs. Each paragraph had 2 to 3 sentences. I got scolded by somebody who said, well, these long-winded emails are killing me. Now, I have an app that shows me if you email me, I'm going to know a whole lot about you because I got this like spy app. It's only stuff that you've put on your public profile, but it kind of highlights it for me. You know what? I don't even want to talk about that one. I wish that gentleman all the very best. I do. I'm gonna leave that one alone. But I'll share if this is it. If this isn't it, I'm gonna leave it alone. Oh, okay. Here we go. Now, somebody said to me, and I know what you're going to go, how dare him, right? Okay, but that's all right. I'm a big boy. I can handle it. I'm not going to put any names in. He emailed me yesterday and he said, could you cancel my free membership? You're way too expensive for me. Wow. Okay. I mean, so far all we've done a free trial, but we're up. So anyway, I said, well, in case you missed the show today, no, he was responding to that email. So I said, okay. Yeah. I said the bond trade today, there was $1,000 per contract available. That's what the market made available. The Euro trade, there was $1,000 per contract available. The Russell was 3 ticks shy of $1,000 per contract available. Doesn't mean you're going to get it all, just that's what's available. And gold was 1 tick shy of $2,000 per contract. Plus, Michael made over $400 per contract trading for 2 hours in the live trading room. I've been up and down Wall Street a time or two. It's really going to be pretty hard to beat that. Of course, there's always the guy willing to sell you the Forex robot for $99 or give you the free binary options software, but we both know how that turns out, right? Not good. Are we looking at the same thing? We're now in our second decade of teaching people how to trade. I'm truly sorry we weren't able to be of service. Our aim is to please, so I'll cancel your free trial. If we can be of service in the future, please let me know. And so I say that to say to anyone, the late night infomercial guys, they want $7,000 for 5 days, okay? You can't learn how to trade in 5 days. I'm sorry. Even if they gave you that pill that guy takes on that new show, the NZT. Have you seen that show? It's pretty interesting. It's a pill you take, and it just makes your brain like, you're like the smartest guy in the world. And I only watched one episode, but it looks pretty interesting. And I don't doubt that modern science is heading in that direction. But anyway, the late night infomercial guys, $7,000 for 5 days in a classroom setting. And the only flaw there is you just can't learn how to trade in 5 days. That's why we do 90 days of mentoring and unlimited personal mentoring. And we charge a fraction of what the late night infomercial guys. So we'll never be embarrassed or apologize for our price. In fact, I'm always, every time we have a board meeting, I raise my hand. I say, raise the price, man. Really? Because I think the value is there. But I always get voted down. So, good for everybody. We want to help. We do. But our time is valuable, as is yours. And unless you have skin in the game, you're not going to focus and pay attention and do all the things that you have to do, like write the business plan and the trading plan and all the other things that you got to do. Just to become a successful trader. I mean, trading's not easy, but it can be simple if you do all the stuff you're supposed to do. See, if you just put it up on the shelf with all the other stuff that didn't work, right? Guess what? It won't work either. If you want it to work, you got to work it. All right, good word for the day out of Romans 12:8. Characteristics of godly leadership. If your gift is to encourage others, be encouraging. If it is giving, give generously. If God has given you leadership ability, take the responsibility seriously. And if you have a gift for showing kindness to others, do it gladly. Leadership in business, politics, and public service doesn't automatically qualify you for leadership in church. See, they're two different arenas. J. Oswald Sanders says, the overriding need of the church is for a leadership that's authoritative, spiritual, and sacrificial. Let's look at each of those qualities. Number one, authoritative leadership. People respect leaders who are certain about where they're going and inspire confidence in those who choose to follow them. Tentative leaders don't motivate others to get on board and stay on board. Uncertainty confuses and disheartens the followers. People follow, almost without question, someone who's wise, strong, and faithful to what he or she believes. Even to the bizarre, like an Adolf Hitler or a Koresh. I know, scary. Be careful who you follow. Number two, spiritual leadership. We're attracted to leaders who are gifted and charismatic. But these natural characteristics aren't enough. Followers can be captivated by human traits, often to their own cost. Don't settle for being a popular Pied Piper. Godly leaders are committed to connecting their followers with Jesus, not with themselves. Do your people know, love, and serve God more because of your leadership? Well, if so, then guess what? You're a godly leader. And number 3, sacrificial leadership. First there was authoritative, then there was spiritual. Now we're on sacrificial leadership. Would you still lead if, like Paul, you were uncomfortable, betrayed, falsely accused, beaten, half drowned, starved, stoned, and left for dead? Wow, I don't know if I want to sign up for that, right? I mean, that's what you're thinking. Godly leaders like it and lead well. I don't know so much that they like it, but they lead well when it's uncomfortable, inconvenient, unrewarding, and costly. They're dedicated to the sheep they're responsible for and the chief shepherd that they're responsible to. They recognize that Jesus drafted and modeled the prototype of godly leadership at the cost of his own life. 1 Peter 2:21. To this you were called, because Christ suffered for you, leaving you an example that you should follow in his steps. And that's our good word for the day. Now remember, when we talk about leadership, there's leadership in the home, in the workplace, in the social groups, and in the church. And of course, there's public office and other areas as well. So what you might think, well, I don't have a leadership role. Well, guess what? If you're a husband, if you're a father, biblically, you do have a leadership role. And you're called to a higher standard. So you need to take a look at yourself and see if you're doing what you're supposed to be doing. And that's our good word for the day. All right. I don't know if Michael had to take a phone call or make a phone call, or if he might still be here. Might he still be here?
I'm still here for right now, yeah.
Okay, I just want to ask a question because I forgot to ask. The recap of the recap.
21 minutes, 6 trades, $100 per contract.
21 minutes and 6 trades. Yesterday it was 21 minutes and 4 trades, I think. Is that right? Sound right?
Let me look.
One day this week
it was 13 minutes. 13 minutes and 4 trades. The day before yesterday it was 21 and 4.
Okay. Okay, very good. So again, we keep record of that, guys, not to brag or to boast, but to just, have a historical record that it actually can be done. Now, we do it inside of a 2-hour window, same 2 hours every day. We do it in fast markets, slow markets, choppy markets, up markets, down markets, because our methodology, okay, it's not, we decided when we were going to design a methodology, it couldn't be one of these things that eventually was going to stop working because of changing market conditions. We've all heard, that this quant or this algorithm or this method or this system, man, it was awesome for a while, then it didn't work anymore. Okay? We've been at this for quite a number of years, and it works as well today as it worked then because ours is built on a different principle. Ours is built on the principle of embracing the underlying rhythm of the market. Now, of course, the algorithm, our math, has to be able to seek out and find the underlying rhythm of the market, embrace it. With us, you're never going to catch a top, you're never going to catch a bottom. But what you'll have an opportunity to do is to take a bite out of the middle between the top and the bottom. And hopefully that bite or 2 bites or however many bites it takes will be sufficient to get you your goal for the day. All right. It is officially top of the hour, plus 1 minute. So we're going to come back to the Concierge Trade Alerts here in just a bit. But it's time now to head out to Vegas and talk to David from pagetrader.com and get those forecasts from the edge. So stand by. Don't touch your radio dial. We'll be right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now, be on the way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you for today.
Good morning, Dwayne.
Hey, David. Good morning. Welcome to the show.
Thanks very much. Pleasure to be here. There we are.
Well, we're glad to have you. You okay?
Thanks very much. Yeah, I'm fine.
Did you get rested up?
Yes, I got rested up. I go to bed pretty much at the same time every night. Kind of have to.
Well, I mean, I know you had that weekend thing, and that takes a lot out of you.
It does. It actually usually takes about a full week to get back into the full swing of things, and so on. But I feel pretty good. I do. And it's a beautiful day here in Vegas. It's overcast. Some people are still in town. Some people were planning on staying for a few more days for whatever their reason was. I think there's a trading expo out here in town as well, and so they wanted to check out that. Are you participating in that at all? No, we didn't participate in this one. We've been in a couple of them, but our participation is really, we don't have a booth and all that stuff, but we participate on a certain level. We have a couple times in the past. And it's interesting because you do get a chance to meet people who are in a wide variety of life situations. You know, it's not just people who are retired or people who are young trying to get extra money. There's just a wide variety of people who are interested in the markets, or interested in a specific market, something like that. I told you last time I was there, we were speaking in some room where Larry Williams, the great Larry Williams, was there, and he happened to be just finishing up, and I was next, and we had a couple nice words on stage, and he was very kind, and there was no one-upsmanship or anything else going on. He was just a very kind guy. He had asked me what we're doing, and I explained a little bit about it, and he had a comment on it, and so it was very nice. And he moved on to wherever he goes. I think he's at those quite a bit. I think that's something that he is really into. Yeah, he's. He gets around.
I think that is. I think you're absolutely right. That's one of his deals.
And at this point, he's one of the greats, and they want him there. I don't know that he would even have to. He doesn't have to pay to be there. So because they want him there.
Yeah, I mean, he's like a draw. You're right. He's a drawing card. He's people will come out because Sure. So he gets. The rest of us mere mortals have to pay for our booth and our spot, and he gets his free. That's cool. So let's see. Any news that? Well, yesterday Walmart got beat up, and I brought up a chart earlier, and they're still. Netflix is getting beat up today. Their earnings report. But Walmart, they didn't exactly just, they didn't do a one-day bounce back. Here's the daily chart of Walmart. I think. Come on. Did I spell it wrong? WLMT, isn't that Walmart? Maybe they changed their symbol. Try to hide from their earnings. WALMART. The two biggest IPOs of this year. Oh, it's WMT. That's the problem. The two biggest IPOs of this year have like totally flopped. So that's sort of put a negative, a heaviness on the markets, on the street, as they say. So here's Walmart. Here's the biggest sell-off in, I forget how many years they said, one-day sell-off in quite a number of years. And now here's today, you know, trying to, I guess, find a bottom. Do you have, David, do you follow Walmart? Do you have like daily tops and bottoms?
I haven't been, but I'm going to take a look at it right now with you, and let's take a look together. And yeah, they really did have a crushing decline yesterday, no doubt about it. But it's important to look at, obviously, it's important to look at the bigger picture, and that's again why I was bringing up that, you know, a lot of times those shorter-term moves, you can anchor them off of some larger, more important thing from longer-term time frames. What I think they're doing right now is they're putting in what we would refer to as a semi-annual bottom. And in the end, it still may end up being even a yearly bottom, but this kind of sell-off in the year 2015 is part and parcel to our forecast for a yearly top in 2015 to be followed by a multi-year decline. So the Walmart looks almost like what the economists, or the start of what the economists, remember we talked about the other day, there are some economists two in particular that were forecasting in the first week of October that whole governments were going to collapse, and along with perhaps markets and so on. We haven't quite seen that yet, but Walmart might be a precursor to that. If you look at Walmart on an annual basis, they put in a yearly high this year and they're selling off real good. As it stands right now, we would expect the first 6 months of, I know this is a really long time period, but the first 6 months of next year to mark an important bottom. But I would have to do other work on this in order to really dial down what our expectations would be. This is really general, and like I've said many times, you can take a methodology and you can use it in a very bland way, or you can learn more and more about it and begin to use it in a more advanced, perhaps sophisticated, whatever the term is, way, so that it can be much more useful to you under certain sets of conditions. And I have done that with reflected wave and with squares and so on. So I haven't done all the work on it yet, but just as a very basic thing, we'd be looking for the first 6 months of next year to mark a bottom. So this is not I don't think the low is in at this point. I don't think at $58.75 that this market, that if you bought it here that you would be, or if you sold it here that you'd be picking a bottom. I think they are going to definitively have lower prices here. I wouldn't be surprised at all to see them in the low 50s or lower before this is all done. So, okay. But that's without doing, that's really without any new, any real work done on it yet. Just a cursory glance here.
All right, let's take a quick peek then at Netflix, NFLX. Is that one that you follow at all?
I think we have followed it in the past. We don't have it in our list right now.
Let me see.
But let's take a look
how
at them
bad
as well.
They're, or what the problem was with their earnings. I'm assuming this is an earnings situation. Netflix is getting destroyed after earnings. Okay. So I guess they reported after the bell yesterday. Netflix has reported a third quarter earnings, and it's a miss. Earnings per share came in at 7 cents on revenue of $1.74 billion, missing expectation. Following these results, shares were down as much as 14%, but during the company's earnings webcast, shares rallied with Netflix off just about 1% near 5:35 p.m. Eastern yesterday. Wall Street was looking for the company to report adjusted earnings per share of 12 cents on revenue of $1.75 billion. On the user side, Netflix added 880,000 members in the U.S., below Wall Street's expectations that the company would add 1.25 million. In the same quarter last year, the company added 980,000 domestic users. Netflix said in its earnings release that our over forecast in the U.S. for Q3 was due to slightly higher than expected involuntary churn or inability to collect, which we believe was driven in part by the ongoing transition to chip-based credit and debit cards. That's interesting. Because, some of my credit cards, I got 2 cards with a chip, but I haven't been to the post office box in a while. I may have those other chip cards waiting. International streaming ads came in at 2.74 million, beating expectations to add 2.45 million users during the quarter. So, I don't know, it doesn't all sound so bad to me. In a note to clients ahead of the report, analyst at Bespoke said that the stock has declined at least 9% in each of its last 4 October earnings reports, including a 19% decline in 2014 and a 35% decline in 2011. And so this makes it now 5 in a row. And I believe someone in the audience the other day told us, David, that Netflix did a 7-for-1 stock split like Apple. Is that? Do you recall that? Somebody in the audience saying that?
Not directly, no.
Okay. Maybe somebody in the audience, maybe you could. Let me just type in Netflix stock. Because this thing was up. It was trading $300-400 at some point. With stock split, Netflix shares now at $100. Okay, the date line on this is July of this year. Yeah, July of this year. Come on. After trading Tuesday, all shareholders got 6 additional shares of stock. Now this, again, is a date line, July 14th of this year. After trading Tuesday, all shareholders got 6 additional shares of stock since Netflix shares closed at $702, down slightly from its new high closing price of $707. The new shares are expected to trade at $100.37 when trading begins Wednesday. So, with today's sell-off, we're still in that, $100 range. So,
it doesn't look half as bad as Walmart does to me.
Yeah.
It isn't over yet, but it doesn't look half as bad. And I think if they start closing below certain levels, it would be a much worse thing. But this really doesn't look anywhere near as bad as the Walmart situation does. Walmart is definitively going lower for some period of time. They're going to continue to grind to lower prices. This is not necessarily, this is definitely not so far, anyway, in Netflix, anywhere near that type of outlook with that type of, time pressure, if you will, on the market.
All right. So that takes care of the 2 big boys. And I wanted, McDonald's franchisees say that this all-day breakfast deal is a nightmare. John Paulson is getting smoked. And Donald Trump's poll dominance in 2 key states is mind-blowing. Now, one of these should be an easy guess for you, David.
The 2 key states?
Mm-hmm.
Maybe Nevada was one?
Yeah, the other one is South Carolina.
Okay.
But more impressive amid an overall narrative that the front-runners' poll numbers have plateaued over the past month is his continued dominance of the issues. In Nevada and South Carolina, at least, Trump is crushing his Republican counterparts on some of the issues most important to GOP voters. When voters in Nevada were asked who could best handle the economy, 67% said Trump, which put him 60 points ahead of Carly Fiorina. On foreign policy, 34% said Trump, 20 points ahead of Marco Rubio. Illegal immigration, a whopping 55% said Trump. And ISIS, 46% said Trump, 33 points above Rubio. The economy, 59%. Foreign policy, 27%.
See, all of these things like ISIS and the economy and a number of other things that the Republicans talk about were not talked about in the Democratic convention by very much. I mean, they might have just glanced across them, but these are really, really big issues. The far left loves to focus on subjects that cannot be measured so that they cannot be held accountable, like climate change. Our president has brought up before that, I mean, seriously, think about this.
Right.
The president's brought up before that, the most important and most pressing issue is climate change. I mean, the world is falling apart at its pieces in the Middle East, partly due to what he did in Iraq and other bad decisions that he's made. And he's running around trying to point over here to climate change. But this is a very common thing. Or gun control, which, people are going to kill other people one way or the other, with or without a gun, a legal gun, not a legal gun, and so on. These are really hard to measure the success or failure of these kinds of big swathy things that they go after. Climate change is one that they can just sing rhetorically about and never be called to task on their results because the results take too long and it's too hard to detect and all this other stuff. They focus on that. The Republicans are right out there battling the really, really hard issues. If you take a look at the debate the other night, it really was a very, very mild debate. There wasn't a lot of really tough questions there.
One of the questions was, what are you going to do about climate change?
Yeah, I mean,
how about
seriously.
Nothing? How about nothing?
Yeah, how about nothing? How about we pay attention to things that really do matter, that are potentially going to really make big differences in people's lives here in the United States, including the continued failure of our policies in Mideast and so on. So, that's one of the reasons that they pay attention to all this stuff. I also couldn't help but notice that, and I'm sorry, and I hope this doesn't offend anybody, but
they will.
Again, the left is the party of inclusion. They just love you. They just want to help you. They just want everything to be good for you at somebody else's expense. And they really are very sensitive to racial and other issues, and they hate rich white people. Well, when I looked on the stage on the Democratic convention, all there was rich white people on the stage. True. And when you looked on the Republican stage, you have Latinos, you have blacks, you have women, you have, complete inclusion like the Democrats want to claim they are.
Nice point.
So, it's just a bunch of nonsense. And ultimately, I think they did themselves a disservice by not asking better, more informed, and harder-hitting questions. And the reason why I think that is because it would have created more interest in their answers, but they just don't want to go there. And I think the Republican, if you look at that, it was a tremendously feisty bunch of questions and very difficult things in many cases to answer correctly. And, it was a much more interesting debate. It was a real debate. You got Bernie Sanders here, handing Hillary a complete pass on her email stuff, and, so who cares about her damn emails? Well, we all kind of do, since it goes to her trustworthiness and her ability to think clearly and do the right thing and legality and what the FBI is investigating it, Right. I mean, it just was it's not supposed to be a love fest. It's supposed to debate ideas that really are meaningful. And, again, we didn't see that.
Hey, this thing I have up on the screen, are you familiar with this? The Juice Box by eMotorworks, high-performance charging solutions for electric cars.
I have not seen that, but that sounds like a electric car charger.
Yeah, it's on Fundable, which is where they raise money to bring these things into production. eMotorworks hasn't just built the charger for the EV industry. We've also built a smarter grid. Our smart grid charging stations charge your car up to 5 times faster than the cord that came with your car. And by equipping each station with Wi-Fi and cloud capabilities, we're building a cleaner, cheaper, and more efficient electric grid. Electric vehicles are the future, you know that. What do we got? A smarter box. Our Juice Box charges EVs at the optimal time of day to reduce electricity costs. It ensures that the greenest possible energy is being used, and it even captures grid payments to make it more affordable. More on that in a bit. So I won't go through the whole thing, but
interesting.
Yeah, it's called, the name of it is the Juice Box, and I think the company name, let me go back up here, E-Motor Works, W-E-R-K-S. So you can Google that later. And of course, if you donate money towards the Fundable campaign, you probably end up, depending on how much you give, you end up getting one of the things when they go into production. So.
Well, that is great.
Yeah.
Well, we're headed in that direction. You know, all of the, everything's headed in that direction now. We know that. And hydrogen is going to be, if people say, well, the old thing about the oil companies, they were trying to kill the electric car and all that stuff. And, the oil companies are not killing the electric car. The oil companies don't have the capacity to kill the electric car. There were other reasons that it didn't make it the first time around, but this time they are making it, and they continue to make it. They're selling about 10,000 a month between hybrids and electrics in America right now, and that's going to continue to go up. But what the answer to the electric, the answer that the gas and oil companies are going to bring out is hydrogen. And so hydrogen is going to be their fuel that they want to fuel the future of cars, that instead of being battery electric, the storage system is batteries. Instead of that, they're going to have an actual hydrogen, I forgot the term, but it's on board, and it produces hydrogen by through a process of where they split the oxygen atom away from the other molecules, and they use that to produce electricity. And so that's where the oil companies are hoping the cars are going to go, and they're trying to influence the car manufacturers to go with hydrogen. And hydrogen has its own set of, tricky little problems with it as well. So now the big fight is between the hydrogen fuel cell cars, and some people call them fool cells, like you're a fool if you have one, and the other one, and the other side, which is the battery electrics. And batteries have to get better and lighter and more dense in their energy, and the fuel cells have to be proven to be completely safe, and there has to be an infrastructure of fuel stations all around the country that will allow you to drive them. So that's where the oil companies are working, is they will produce that hydrogen, and that's what cars will be driving on. But it's not, the race isn't over yet. The battery and fuel cell have a long way to go before anyone picks a winner out of those two.
Well, this juice box, they've already sold 5,000 units on Amazon, so this is a product that's already available that you can put in your garage. I think the other thing that they're working on is they're putting in their own charging stations, just like Elon Musk has done with, what are those called?
Superchargers.
Yeah. So apparently they're putting out their own grid. But you can go to Amazon right now. It says we're an Amazon #1 bestseller. We've already sold an impressive 5,000 units. So, well, let's do some markets. How about that?
Sure. I'm ready to go.
S&P.
Yeah, the S&P is very interesting. I mentioned on your program yesterday that the S&P, I expected the S&P, the normal thing for the S&P to do yesterday was to not be able to get above 99, and that they would come back down and test the 1987 to 1985 into later in the session. And yesterday we swung up to 1998.50. They weren't able to get through 99, and they did indeed spend the rest of the day going down, and they made a low of 1982.50. They certainly completed the 85 downside target. So that was a nice move. Today the market is, I think the market is going to move higher into tomorrow. I think that the market is very likely to test or attempt or exceed the 2010 to 2011 level on the way up here. And this is something that we mentioned to people yesterday, that the market was ready. We saw a theoretical wave. Our preference would have been for the market to go lower. I would have liked to have seen the S&P I don't always get what I like, but I would have liked to seen the S&P get down and test a little bit lower prices, which would have made a new long entry for trading purposes. It would have been better. We would have been able to do something with that a little more effectively, because when the normal levels are not just kind of not really forecast levels, but just sort of normal behavior. If they don't do that, it leaves you with some uncertainty, and that's the antichrist to our whole trading strategies. We're trying to find the most certainty in what normally is a very uncertain market and be able to trade effectively off of that. And so I think we're going to see substantially or somewhat higher prices here, and with the fact that they didn't go a whole lot lower, we might be able to infer some strength from that, and so that might help us to believe in higher prices later than the 2010-2011. But that's what I think we're going to be seeing at this point coming up here, is I think we're going to be seeing some higher prices here than the numbers that we're at right now. So that's the S&P. I'm glad to see them running it. I'm glad to see them firming up here. We told people today, as long as they, continued to close above 1996, that would be somewhat stronger of a position, and they did, and we're now seeing a nice pop to the upside. So I'm happy to see that. So that's basically our outlook right now. They may have some pull back and some reaction here on the way up, but generally speaking, I think we're looking for higher prices into tomorrow. I think that would be likely here. So there you are. That's our outlook.
All right. Let me see what kind of market questions we've got here for you. Casey, I'll have to check that out later. Kishi's plasma reactors. Okay. James, at either debate, did anyone ask the question, what are you going to do about our catastrophic debt? Yeah, I guess not.
Yeah, that's off the table. None of that has any meaning to them. It's a new world. It's the world of the giveaway. The left and their whole debate is how much can they give to people? How much can they just give away? And it's wonderful to say, it would be great if everybody, had a flat panel TV. It'd be great if everybody had an education. We think everyone should have an education. Well, so do we. So does everybody think that everyone should have an education. Sure. Thank you for the brilliant insight. We think that everyone should have some transportation. Well, so do we. So the problem is that it's not free. Somebody has to pay for that, and they're not stating how they're going to do that. They're staying strangely away from how they're going to give millions of educations to people that cost $100,000 or whatever it is, without so these people don't have to pay. As if I recall, there's a little bit of a straw man thing going on here, that no one is able to afford an education. Well, I'm 58 years old, and through my whole life, there's been thousands of colleges and universities across the United States where millions and millions of people have been getting an education. Those people go into aerospace, they go into working for Tesla, they go to work they're getting education. So this whole argument that there's people that just, can't get an education. Yeah, there probably are some people who can't get a UCLA or a Harvard education. But there's now more than ever before alternatives to that, even on the internet, where you can get an education if you want it, if you want to work for it. But this whole narrative that they're bringing up, that there's all these people that just can't get an education, is a bunch of nonsense. There's millions and millions and millions and millions of people every year who are getting college educations, either at the highest level, at the Harvards and so on, all the way down to the state universities and all the way down to the online universities, which we have much more. But they're presenting it as if we need to change everything because no one's getting an education, and that isn't true at all. The people who don't feel like working are not getting an education, perhaps, but you can get an education nowadays much, much more than you ever could have in the past because of online universities, and there's tuition programs. There's so many things. There's so many options, and they're trying to play the story that, no one's getting an education. It's just too expensive.
There's some new legislation that's really clamping down on some of these online universities, like Phoenix,
sure.
Phoenix University, which has nothing to do with Phoenix other than they do have an office here. It's named that for a different reason. I had a friend that worked there. He made a ton of cash as an enrollment coordinator, which means they run ads, people call into the boiler room, and they match you with funds. And he got escalated up the ivory tower. He was really doing well until some law made a setback, and now they clamped down even further. But aside from that, I took my son last night, who will be his freshman year next year, and so we went to career night. And there was never anything like this, because I grew up in a small town. There was only one high school. But all the, or in our school district, all the high schools were represented. And many of them, like, he could go to the Coding Academy. Now, that is a high school where you get a 9th, 10th, 11th, 12th grade education, but the focus is on computers and 3D printers and writing code. There's another high school where the focus is on becoming a law enforcement or a fireman. Another high school focuses on medical. You know, you want to be a doctor, you want to be a nurse, you want to be some kind of a health technician. All these different areas. If you want to go into the military, one of the high schools there, that's their big specialty. They cater to the kids that want to be in the ROTC and get prepared for a career in the military. I was really kind of astounded. And I'm standing in the middle of this huge gymnasium with my son, and I'm like, so son, what do you want to do? And he's like, Dad, I don't know. It's like, okay, well, let's get a lot of brochures and get your card signed, and, you know, we got to start talking about it and try to figure it out. He has some interest. He's very, very talented with the saxophone. According to his music teacher, he could be the single most talented student that he's ever had. So, I mean, that's sort of Juilliard material if he'll get passionate about it. He's just really good at it, and he just kind of takes it with a grain of salt. Like on the volleyball team, when he misses a point, you know, I mean, he's really good on the volleyball team. Their team's undefeated, but like when he misses a point or something, or you can see it doesn't faze him too much.
Mm-hmm.
Oh well.
Mm-hmm.
He's very good looking, you know. We've let his hair grow out, and it's kind of curled up. And so when we go to the mall, little girls get their breath taken away. And I mean, this is a little guy that used to see pictures of me like sitting in my lap. He's as tall as I am now, considerably taller than my wife. He's a young man. So, and he can deadlift 80 pounds of shotcrete. Because this old man didn't want to get it out of the car the other day, and he said, "I got it, Dad."
Well, it sounds like you might be raising Superman.
I think I. Yeah, and I know what his kryptonite is, but I'm not going to talk about it here. So.
All right.
Okay, David. There was a question about crude. Do you have anything you can share on crude oil?
Well, our general expectations have been that crude would move lower. I don't remember what I said on the show, but you know, in our group, of course, that we were looking for crude to continue lower down to, I don't have the numbers right in front of me, but they did move down there yesterday, and they are continuing lower today. We're flat in crude right now. We did give out an indication in crude about the decline into yesterday. We felt that that was very likely to happen. Let me just get them up here real quick.
Okay.
So we're, we've seen a bounce here though today. We started out moving lower, and we've had a nice bounce today. So we probably will have another indication. I mean, I think the next important daily bottom for crude would be tomorrow, October 16th, plus or minus a day, which is Friday. And that may have occurred already. In other words, it may be that they maybe put it in one day early today. And we'll see. Let's let them show us. And then we may have an indication off of that. That's one of the great values of this for us, for Reflected Wave, is that it gives us a very definitive, and people who have it, a very definitive point in time where a very specific thing is likely to happen, in this case a turn. And so we'll watch that into tomorrow. We may even have a trade indication to give out. But for the time being, we're flat in crude. But that would be something I would throw out there, is that we think it's likely that we're putting in an important bottom.
Okay, very good.
So
the next question was bonds, 30-year Treasury bonds. You got anything there?
We're flat in bonds right now. I can tell you that, let's see what I can tell you here. It's been a little bit slower in the bonds for us lately, but I do think there is a tradable indication, I think, on the downside that we're putting together. I don't have it all done yet, but I think that's something that we will probably trade. We may trade that into next week for bonds. So I'll just, I have to wait on that a little bit. I do have a couple of charts I can show Dwayne for today, and I'll send them out. It's been we're getting back into gear here after the weekend seminar, and thank you. A couple things that we've done this week. This is crude oil. This was on October 12th on Monday. We were trading at 48.30. We were looking for crude to go down to $46 from here. They made their first attempt here. They got down to 46.71. They rallied up here and then continued down and did the 46 level. They actually, at the time that I printed this, they had done 46.01, but the target was 46, and they got down to a swing low here at 45.94. Now today we've gone a little bit lower, and we've kind of caught back up, and we'll see if we can do something with that. Right behind that is the S&P. This was this was the big 100-point move deal. I'm going to leave that. This is crude oil. This I really want to cover this a little bit here because this was a great example of the square principle and some other things at work here, but mainly the square principle. When we were at the seminar this week, many in the room were long crude based upon based upon our indication, and they were at the seminar learning why they were long. So on Wednesday, September 29th, we gave out the indication that October 1st would be the next important daily bottom, and that 1110 to 1107 was buying territory for an advance to 1185 to 1190. That's a big move. That's a 75-point move from there. We took some off here. We took some more off here, and then we finalized it yesterday. Today they actually got up to 91.70, but yesterday they completed 1189.90. Gold is still in a strong position here, but this was the trade that we felt was going to happen, and it did. So this is huge. This is a $7,000 per contract or more, up to anyway, or more gain given in advance, not something that's after the fact that we're coming to after the fact and saying, look, here's what you could have made. No, this was given out completely in advance, and I think it caught some people anyway by surprise that the market really was ready to run to that type of level, and it did. So I'm delighted to be able to show that. In the center here, this was October 14th, yesterday, failure at 1999. This was the stuff I mentioned on your show. Will indicate a decline to 1987. On your show, I said 87 to 85. I should have put that in here, but this was the move down. We were at about 1996 at the time. They'd already come off the high, and then this is the move down. This is the force that we talk about, hitting the market, pushing it to lower prices, and they did get down to 1982.50. Behind that, we didn't get the whole move, obviously, but we got a nice move in the British pound. Any further advance and failure at 153.50 can be shorted for a decline to 152.60. So this is us getting on the British pound up to that level. They spiked as high as 153.82, but they closed every day below that level, and then they shot right back down to get us the 152.60 to 152.50, and then they turned right around and really ran them. That was but this is a 100-pip move. That's 100 pips just in the forecast, not beyond the forecast, but what we were looking for. Shorted at or near 153.50 at a failure for a decline to 152.60 to 50, and that's a nice, that makes up for a lot of very, very small ins and outs of trades in a single trade. This Monday, we had crude oil can be sold short for a decline to 47.40. We were at 48.40 at the time. This was the wave that we were thinking was going to hit the market, and they certainly did 47.40 there. October, so this is the week before, so let's go over the chart on the left here. We don't have that many this week, but this is the S&P Thursday, today, October 15th. No new long entry is indicated because a further test of 1992 is likely a little later today, and this is that wave down testing the 1992 level. In order to do that, there had to be a theoretical wave that we could see in advance that was going to push prices to a lower amount. And now we're running up to those higher prices we talked about. We think there's a trend happening. We talked about this yesterday. And again, we would have preferred it would have been much easier to trade the long side if we would have seen somewhat lower prices yesterday. And then Tuesday this week, October 13th, a breakout above 114.33 in the euro is a new long entry for 114.56, initial profit target, and we got everything that we were looking for. We were looking for a total move of 114.90, and it's not listed down here, but that's what it was. We got up to 115 here, and then today 115.05. So we had a nice move in the euro as well. So we're getting back into the swing of it here, and then I think that was last week. So that's everything that we have, and if I do want to mention that if anybody wants to, they can come today. We're having a webinar on the Square Principle and our upcoming seminar in January on the Square Principle. The Square Principle is how we develop the trade in the gold market, the $7,000 per contract trade, and I explained it entirely to the audience, why they were in it and why it's going to where it's going. They all got it, and it was a fantastic thing to have them already in the trade at the seminar so I could show them why. And it was, at that point, it was still 30 points. It still had 30 points to go on the upside, and they completed that. So if you're interested, come to our website, pagetrader.com, and click on, there's a calendar on the front page, and you can sign up for today's webinar. It's at 1:30 Pacific, 3:30 Chicago time. And we'll go over in great detail what it is that you will learn and what you'll be able to do, specifically what you will be able to do with that principle. It's more of a phenomena even than a principle, but it's a principle that expresses itself as a phenomena. And it's very interesting, and I hope you can come to it today.
Okay.
So there you are.
You covered bonds, right?
To some extent, yeah. We're looking at it. You know.
Tim says, my audio was not working at first. Is Davis still expecting lower prices into Friday or Monday? Yesterday's swing low was 2 days before Friday. I guess, Tim, you're referring to S&P?
I think he's talking about the S&P, and we, okay. Tim, in our messenger and in our reports and stuff since yesterday, we've been talking about if the market did get down to 78, which it didn't, and firmed up, we'd be buying the market anyway for a move up to test or attempt 2010 to 2011, and that move we think is underway now, and we're up substantially on the day here, but that's what we think is underway here and happening. I wouldn't give the target out normally if we weren't just 6 points away from it. So, but that's what we think is going to happen here in the S&P, and the S&P is still acting strong. Because they couldn't go down and just do some normal kind of natural levels that might normally happen. And so really coming into next week, it's kind of exciting because the market will have committed to a certain extent to an up move, and we'll be very interested to see how they follow through with that, because remember, we have a yearly top that's in, and we also have a monthly and quarterly bottom that's being put in. So the S&P is at a very interesting juncture here, and probably is going to give some very interesting and valuable trading opportunities into the end of the year here. I hope so.
Okay.
So there you are.
Keith says, what do you think about the compressed air cars? Is that ever going to happen? Is that ever going to be a reality?
Just if he's asking me, until they come up with something a little bit more than the little putt-putt thing that it's doing.
Yeah, the Tata Motors, is that really, that's the only one out there, right?
Yeah, there's that has a lot of work to do before it's ready for prime time. So,
okay.
I will say this before I leave, though. Yeah. For those of you that are interested in electric cars, go check out the all-new 2017 Chevrolet Volt. Drive it and try to pretend like you don't love it, and put that act on in front of me, and I'll see right through it.
When Garrett Jones, when he was on the show Monday, we talked about Tesla briefly, and he has been to the plant, toured the plant, and watched them actually make the cars.
Build the cars, yeah.
And then
That's
went
fantastic.
and took a drive in the car, and he said it's just absolutely mind-blowing.
Yeah, I've been saying that since 2012.
Yeah, you have. You really have.
It is really amazing. When you get a chance, you'll never go back to piston cars. Now, listen, I do have to run. I'm sorry, it's past 45 here. We'll see you here tomorrow, Dwayne. Thanks for having me on. See you then.
Guys. All right. We're going to swing right in now to our good friend Ed Curry, our every other Thursday friend. Last Thursday, we had Burwell Pike with us, and we had a great discussion about multiple time frames. Now, let me just show you, in case you missed it, how to find it, because it's well worth the listen. Hang on. Let me go to our Google Plus page, okay, and let me scroll down to last Thursday. Let's see, that was Tuesday, Monday, Thursday, right here. Last Thursday, our co-host, the armchair historian, Burwell Pike, he's on one Thursday, and then the alternating Thursday is Ed Curry, who's going to come live here in just a moment. Burwell delivered a brilliant presentation on the effective use of multiple time frames, from yearly all the way down through quarterly, monthly, weekly, daily. I even got down talking about a 1-minute chart. Markets are fractal by nature, and Burwell delivers an objective look that can be appreciated by market veterans, yet also clearly understood by a market novice. I can't encourage you enough to click here, okay? And Burwell comes on at the 90-minute mark. So if you want to just scoot past all the talk of the day and get right to his presentation, it is just fast forward up to the 90-minute mark. Also, I wrote an article, I don't think I mentioned it here, but I'll show you where you can find it. If you go to our blog, which CFRN.net, on the navigation bar up here, click Emini Radio Blog. Now, if you click Watch Recent Broadcasts, it's going to take you to this Google Plus page where you can watch every daily radio show, and there's hundreds of hours of Q&A sessions, seminars, webinars, classes, boy, hundreds of hours of video content. If you click the other selection, View Recent Posts, the most recent post was Learn to Trade Emini Futures with multiple time frames, and I used the material that Burwell spoke about, but I also hyperlinked you back to an article I wrote in September of 2012, and that article was called Mastering Multiple Time Frames for Emini Futures. Now, there's a chance you might not remember that. So, just Google Mastering Multiple Time Frames Emini Futures. And just below the ad, that's the article. And then that's the article, and right below that is the article with Burwell. Okay? So if you can remember Mastering Multiple Time Frames, Emini Futures, probably just E-mini is sufficient to do it. There you go. And use an incognito window so you get a pure search. So your results are not skewed by places that you normally hang out at. Okay? Google knows what else is on that email server, but for him to just, I mean, like the biggest bullet he had to fire at her, he just totally threw it away.
Right.
I don't want to talk about that. Yeah. So,
well, it's good.
See, now that I watched The Good Wife, that TV show, now I understand how politics works. So,
I didn't watch it yet.
I was so naive a few years ago. Yeah.
You know, that's really something that things are shaping up like they are. But it's, you know, to me, it's a simple thing. And I don't know about, you know, anybody else, but I feel like my individual rights are being whittled away by the government and by the regulators and by the Congress not doing its job. It's hard for them to do the job when they're split like they are right now. people act like, well, we need to compromise and get something done. But I'll tell you one thing I've noticed. When they can't get anything done, the market just keeps going up. Because usually what they do is going to collide with business interests, individual interests, and put them against government wants, ideologies, what they think we should do and what we should be like, including how we view everything. I mean, our Supreme Court can now tell us how to view marriage. At least they think they can. You know, I don't have, anything against what people do, because I think God gave every one of us a free will, but just don't make me think like you do. I want to be able to have my head clear.
Yeah, don't force your way of life on me. Whatever you want to do,
right.
Go, I don't have to agree with it.
Or my kids when they're in school.
Oh boy, that's a real hot potato there, because supposedly this indoctrination thing is getting more and more intense. Now, it hasn't hit my kids' school yet, but I mean, from what I hear, they're getting really graphic and really explaining, what it is, what two men do together and what two women do together. And, I mean, graphically explaining and letting them know that this is an acceptable lifestyle. If you have these feelings and you choose to go in that direction, you're not flawed. You're okay. And I'm not saying anybody's flawed or anything else. I'm just saying, do not say that to my kids. Okay? If you want to say it to your kids, go ahead.
Well, the kids get it.
I'll pray for your kids, but if that's how you feel, they're your kids. I mean, and you'll have to answer to God for what you say to your kids. So that's not my responsibility, but I do have a responsibility to make sure that the things that are said and taught to my kids, that they don't cross. I mean, let's face it, and if you're going to send your kids to public school today, certain lines are going to be crossed. But when they get to that point and start to cross that line, that's when I'm going to have to shut them down and take my kids private or homeschool. I don't think homeschooling's the best idea for them. I know some people do it and do it well. I want them to interact. I want them to have social skills. This is the first year that my son has been involved in sports. His volleyball team is undefeated, and I think he's really getting some self-esteem and some self-worth out of that, because he never saw. He's got a cousin. They're not cousins by blood, but by the adoption and the marriage. He's his cousin, and he's the golden boy, the cousin. With the baseball and the awards, and he's tall and he's loud, and but my son, he's growing up tall, and his hair's, my wife has let it grow out a little bit. It's starting to curl up, and when we walk across the gymnasium, as we did last night at career night, the little girls, they just swoon. Ooh, so.
So, Dwayne, is he starting to look like you did at that age?
No.
Okay.
My parents were not into the long hair thing. They just, it wasn't cool. They didn't even like bell bottoms. That was, kids today, like, they're poking all these holes in their face and their lip and their nose and their ears. Our big rebellion was bell-bottom pants.
Yeah, right. It really was. I remember wearing bell-bottoms. I was in a fraternity at college, and I wore these bell-bottoms out on one of my first dates in college. And I mean, the guys in the fraternity were just going nuts, whistling at me and razzing me to no end, because they had never seen bell-bottoms, and somebody I knew back home told me they were pretty cool, so I bought these things, and they were totally off the wall patterned. It just you couldn't make them any uglier. And I thought they were cool because I was different wearing them. Did
you have platform shoes to go with them?
Oh yeah. Yeah, yeah.
I
got
had
tall.
blue and white platform shoes. Oh, those are the ugliest shoes on God's green earth. But man,
I
at
know,
the
it's pretty
time,
funny, really.
I thought they were so cool,
Yeah, yeah. They made you taller than you were. You felt
Oh,
better and stronger and bigger. And man, if only I could play basketball in these
yeah.
shoes.
Can run
You know?
faster, jump higher, all that good
But
stuff.
it's funny how things change. But the things that make you want to try things like that, there's always something out there to attract the kids. That they'll want to try, just to stand out or feel like they are who they are. That kind of thing, is being, thinking on your own and standing alone for what you believe is what's being suppressed by the culture and the media, so that we all can think alike and we can all have these same feelings and that we can all have the same viewpoint on the climate, especially climate change. That's a big deal. Now, the climate's been changing since God created the earth. And for them to tell us we got to pay a tax because the climate's changing, to hand it off to governments and UN bodies that have been proven to dump all the money, about 90% of it, down the drain and use 10% of it. Now they want to tax the rich and the poor on every mile they drive their car. They want to do that in the form of a gasoline tax. But they also want to monitor the mileage that you have. So, I mean, these guys got big ideas to control us all into like little pawns. It sounds like a conspiracy theory, but it's not anymore because the technology is there that they can do this. They came and shut our power off a couple of years ago, and they didn't even tell me. And I went outside and I found this electrical guy saying, well, we hung a notice on your door. And I said, well, I haven't been out here today. And he said, well, we give you about an hour to find it, and then we come and do this. They changed my power meter out and made it all electric so they could monitor everything, that we use. And then they changed my water meter out. I live in Texas, we got pretty conservative leadership here, but they got this stuff done through the regulators, and who knows where the authorization really came from. I can't find out, but they changed my water meter out. And I was having trouble with, thinking my water bill was too high, and I called the city, and they said, well, let's take a look. And I said, well, looks like you might have a toilet leak here, because he said, let me send you this graph. He emailed me the graph of my water usage. And he said, you see here about 3 in the morning, looks like normally on your flushes it looks like you use 7 gallons. Or, and he said, you shouldn't be using 7 gallons on a flush. So he said, one of your toilets is leaking. He said, I would say that, or it's not seating right. But they can look down, and they sent me this chart that showed every little blip of water we used on any day you wanted to go back and look at it. And I thought, wow. And they didn't tell us about that either. They just put it in. So, the cars, the newer cars from 2014 on, have a computer built in that they can see how fast you've gone. They record your history of your driving.
Right.
And, your usage, your fuel efficiency and all this. If they weren't Volkswagens, of course, then those aren't accurate, I guess. I don't know. But it's just they've got the technology to monitor everything we do right now, pretty much. And they can see us in our homes through infrared imaging. I have this stuff called Tech Shield on my roof, and it's on the underside of the decking, and it's all foil. And it's hard to get cell phone reception inside my home because that pretty much blocks a lot of those signals that they could use. And I think homes that are built like that, you may want to build them into the walls. If I build a new home, I'll build them into the walls too, because they can see right in your house and see where you're at. So that's all I'm saying. We say conspiracy theory, but look what they're doing, and that's the way to shut everybody up. Do I stay up at night worrying about it? Absolutely not. Do I believe in God? I absolutely do. I'm not going to worry about that stuff. But do I want to take action with it? Well, sometimes I do. So that's all. I better get off that subject. I just,
It's okay.
you know, it's just that they've got us where they want us. The regulators, to me, the biggest problem is this. They've written the laws so broad and so deep and so big. You know, we're supposed to comply with these laws or we can be put in jail. Well, how do I know what's in that health care bill? Am I going to get a lawyer to interpret 2,600 pages or 2,700 pages? Am I going to have some legal expert advise me on all the laws that are passed and those that aren't even passed by the Congress but the regulators come up with on their own? This is how we're going to enforce these laws. There's no oversight on that. You know, the Congress traditionally and has always been, they turn it over to the regulators when it gets to the, you know, nitty-gritty of enforcing these things. So we don't have any individual protections against these laws that we can't even read, see, and our representatives that voted for it didn't even look at it before they passed it. To me, we're at a stage here in our, regardless of which side of the aisle you're on, we're at a stage here where the stuff that goes through Congress and passes is not in our best interest, but is in a compromising mode that our interests are compromised against the business interests, personal interests, and ideological interests of the people that are in leadership. And we're on the short end of the stick. We do not have any say-so except how we vote. When something happens to most of the guys we put in Congress, they change after they get there. And that's because, this is my opinion, right here, personal, that lobbying in the United States is the only legal bribery allowed in the country. I mean, why should they be allowed to give the people that are supposed to be representing us incentives financially and gifts and whatever? There's so many loopholes in what they can do and receive. You know, it's just wrong. And that's what enables our rights to be run over, because most of the laws are written today with so many tangles and webs in them that they can do whatever they want to us if they want to do it legally. And we don't even know what it is we're supposed to comply with. So who knows what's hidden in a lot of this stuff. I know that you can read on the internet that there have been many individuals that have been persecuted unjustly by the government, and it didn't just happen in this administration either. So anyway, I'm done, Wayne. I don't really want to go there. I get too worked up about it.
Carson had asked a question. What is that called? Tech Seal. He put something on his roof. What was it?
Tech Shield.
Shield. Okay.
The plywood that's on my roof has a foil backing on the inside of it, and it reflects the heat of the roof.
Oh, and it prevents you from having to wear a tinfoil hat.
It doesn't let the heat penetrate into the... It reflects, you know, the sun heats up your shingles, it heats up your roof, especially when you're in the south.
Yeah.
And it's a barrier to that. It's a radiant barrier, like it can't be penetrated. And, you know, that makes it harder also for any kind of surveillance equipment to see through your roof. I can tell you, it interferes with the cell signals. People, you know,
I bet it does,
come over, you know, we had to switch cell carriers once we moved in here because we couldn't get a good cell signal in it. And we found one that would, and they said, yeah, we might need to put in it was a signal enhancer. And they said they do that for free so that we could get, you know, our signals. But that only works on our Verizon. If you don't have a cell phone from Verizon, you have trouble in this house. So.
All right.
Anyway.
Let's see here. A couple of headlines that we didn't get a chance to talk about. Walmart missed earnings yesterday. Biggest drop, one-day drop in years. Netflix getting kicked down the street today because they missed their earnings a little bit. Trump's killing it in Nevada and Carolina. Now, there was one other article that I saw that I thought might be of interest. Okay, John Paulson is getting smoked. Some of John Paulson's funds have been wiped out in the past 2 months. Bloomberg News report that the Paulson's flagship merger arbitrage fund, Paulson Partners, fell 6% in September and is now up 0.6% for the year. The Advantage Fund, which seeks to profit from company spinoffs, takeovers, and bankruptcies, fell 8.5% last month and is now down 12% for the year. Those funds both got crushed in August during a period of market volatility. Paulson, who became famous for his 2007 bet against subprime mortgages, had his second worst performance ever last year, with his Advantage Plus fund falling 36% and his Advantage fund falling 29%. In 2014, Paulson Partners ended the year up 0.8%, while the Enhanced fund fell 1.6%. Paulson isn't alone. There are a number of big-name hedge fund titans that will be racing to rescue the remainder of the year. So what's your take on that? I mean, is the stage set for like the most powerful Santa Claus rally ever?
Well, if the market was down at if the S&P was down in the 1700s, I'd say yes.
Mm-hmm.
But from here, I'm still not a believer, and I'll show you why when I get the charts. But I could become a believer, but to me, there are certain things that have happened that shouldn't have happened, and I believe there's a concerted effort, like you say, there will be a concerted effort for a rally this quarter. I have my doubts whether there will be a lot of follow-through in it, but I would be more comfortable if the S&P was, another 300 points lower. Then I would say absolutely. It'll be a time if it should do that, and it's not looking like it wants to do it anytime soon. It probably will take some kind of catastrophe to make it happen, but I'm not, betting on the timing of it is tough. Betting on the seasonality of this market, especially with all the interest there are that want the market to stabilize and turn up, you got to take that all into account, especially in seasonal times when it's strong. We just happen to have a lot of minds in the field right now, and I think Europe's one of the main ones, and their banking system is pretty shaky right now. They're worried about a systemic failure over there in a big way, and the Bundesbank, which is the biggest bank in Germany, is being downgraded and having problems at this point in time. So the question is, I think if Europe would stabilize, that's a big if, because I don't think they can do it quick enough. Then I think we could rally from here. But outside of that, I think there's a problem, and they're printing like crazy. They're doing their QE stuff, and they're going on with that like we were a couple of years ago. So they might be able to, put the Band-Aid on and keep going. I think that's the big challenge right now. And in China, we already know China's having a real problem. I mean, you can tell by their oil usage. You can tell by their energy demand that they're having problems all through Asia right now. That some believe is starting to ebb and stabilize. But the European situation is not really showing any signs of it. It's not really showing any signs of it on the energy demand either. So I think there's a problem in Europe right now. And that problem in Europe, if it doesn't get to a real hemorrhaging state, is actually putting money over here into our currency, into our markets. Our asset markets are benefiting from Europe. People fleeing Europe and wanting to put their money elsewhere, and people recently getting tagged in China. They're not real crazy to dump it back in Asia right now. So we're the beneficiary of that, and I think that's the best explanation of why the market is going through right now some earnings reports that you were talking about that weren't good. Neither was J.P. Morgan's the other day, our biggest bank in the Federal Reserve System is J.P. Morgan Chase. They aren't looking good right now, and they're cheap. Goldman Sachs had a bad quarter. And, for Goldman Sachs to have a bad quarter is real interesting. Or let's say an off quarter. They didn't make what they were supposed to make. But yet our market, look at the S&P, the Dow's up 157, the S&P is up this much. I think our market can continue to go up even in a bad earnings season if we have enough foreign inflows to it. That's the only thing I can make out of this right now, if from a macro standpoint. But that's just my opinion. And believe me, I've been wrong many times. And it's okay to be wrong. You just got to not hang your head out there when you're wrong and stay with your, when you see the signs proving you're wrong, you do have to get out. You can have convictions, and it does take a certain amount of conviction to trade, right, Dwayne?
It does. It does. I'm going to send you the charts.
Okay.
Now, there's a new show on Sunday nights with Don Johnson. It's called Blood and Oil. Have you seen this?
No, but I've heard you mention it before. Okay. Sunday nights, Blood and Oil. I have to watch it.
You got it. I mean, now if you have, with your cable company, if you have, like here with Cox Cable, they call it Cox On Demand. So I could, if I had missed the first 3 episodes of this new, it's a brand new series. If I had missed the first 3 episodes, I could go sit down and I could watch it without I didn't record it, but it's just there in the library, so to speak, with limited commercials. So, because you really want to get that first episode so that you understand the character buildup. And I just saw it because it's in Texas and because it has to do... Well, actually, no, these guys are in the Dakotas. They're participating in the big boom up in the Dakotas. But because it's about oil, as soon as you came on today, I thought about you and I thought, man, I bet he would like that show. So... check it out. See if you can find it. And you could probably go to the network website.
I think I have it on demand, Dwayne. I should be able to get it on DirecTV.
All right. Well, here come the charts. Make presenter. Yes. Okay. Now all you have to do is accept it.
Okay. Let me switch it to the right monitor here. Let me know when you see it, Dwayne.
I got it. Loud and clear.
All right. Okay. So, the crude oil market is usually where I like to start. Spend a lot of time on it these days. It warrants it. I haven't seen the market stay this volatile for this long a period in a long time. And I don't see any reason why it's going to slow down yet. So we've been looking at this, for a long time here. And really, we watched it fall all this way in wave 3. We got our wave 4 up. And now we're coming down for wave 5 on the weekly chart. The 4 to 5 is the 5th wave. We set up a pennant on the weekly chart, broke it out to the upside last week, made a nice move up over $50, and we came right back down into the pennant here, which for a pennant breakout, that was a nice, it could go farther, and but that was a targeted amount that it went. It really doesn't need to go anymore. But the fact that it would take it all back in a week is pretty remarkable. Really, you'll usually see follow through the next week on a move like that. I don't know if you agree with that, Dwayne?
Yeah. Oh, yeah, I do.
So to look at the wave 4 here down, which at wave 4 up, and looking at wave 5 down here on the weekly chart, it's broken down on the daily chart. So we're just going to isolate this from this point on. Okay, we're going to go to the next chart, which is a daily chart that'll isolate this current move we just had. And here's what it looks like. So this is the daily chart. We had made an A leg up and we didn't get to the zero line in it, but we got close. The MACD, when it comes back to the zero line, is known as a wave 4 minimum retracement on the system that I'm using here. So once we get up to the zero line, we tend to lose the punch in the move up. We start to run out of steam, and it starts to slow down. Well, this thing came back into congestion and went in congestion. Look how many weeks here, a whole month of September. You know, we have really locked into this range in September, and every time it jumped up, it looked like it was going to break out, and every time it came back down under $44, it came right back up again. And it was like a bouncing ball between two walls here. So we'd break out like there's no tomorrow, and it'd stall. And we break down like right back down again, and then it'd stall. And this went on for a month. But we set up a pennant in there. You saw it on the, I didn't draw it on this chart. The little flag pattern that we had on the weekly chart showed us this. And we got the breakout on it last week. And that move up was quite substantial. It was a nice move up. And this was last Friday when we put the wave 4 in. We didn't know that was a wave 4 top at the time, but what we did know was that this was still a C leg up of wave 4 up. We had an A up, a B down, and a C up. And the question here was, how far do we need to go before we say, hey, we shouldn't be looking for new lows when we turn back down for wave 5? Or will there be a wave 5 down? So let me just pull this up, and I'll show you what I had said last weekend. WTI Brent crude price 5 broke out over a 5-week pennant formation shown on the up chart. That's what we looked at on the weekly chart. Entering the C leg up of wave 4 up on the daily chart, also shown on page 2. The weekly buy signal, we had a weekly buy signal to buy it, went for $3.76 before it sold off late on Friday. Last week, prices were given one more week to break to the downside as the pennant was narrowing to a decision point. So let me just show you that again. Let me backtrack here. I want to make this point. When you see a pennant formation, and this is valuable really on all time frames. Certainly it's not as reliable on the smaller time frames because you don't have as much time to get in or out of those. But it's valid. When you can draw a good pennant in here and you see a breakout of the top, it'll give you that kind of pop. It should give you that kind of pop because there's been people that have been going short in here for 4 weeks in a row, and the thing that you know is when you get above the tops of these, more and more people are getting underwater on their short positions, and they're going to have to come out of them. And I like to call it, when it's a breakout on a weekly chart or monthly chart like this, I like to call it structural short covering because there's layers of people that are short in here, and many of them are commercials. They have deep pockets. They're willing to put up with $1 or $2 of losses on these positions. They have money behind them. They have inventory behind them that's going up in value. But they'll reach a point where they'll be forced to get out of them. But they all have different pain levels. So some will get out here, and some will get out here, and some will get out here. As the higher it goes, you reach the point where you get them all out, which this thing did in a week, and then right back down again here. So the way you explain this, when you go back to the daily chart on this, it was all foreseeable. It wasn't foreseeable exactly where it was going to top at, but what I want to point out here is I'd stick with this thing. I would stick with this wave count, expecting the wave 5 back down as long as we didn't get over key resistance, which was at 5,300 in WTI and 5,800 in Brent. And I like to watch the Brent market because, quite frankly, if you deal with anybody overseas, that's the one they trade off of. So I try and keep an eye on it too. Anyway, I said during this is the break point on the thing, okay? These levels should be decisively broken to reduce the chance to making new lows and wave back down on the daily wave count. So the confidence remains that that's the wave count, and it's a strong confidence until those levels are breached. And at that point in time, we'll take a look at the charts. We'll take a look at the algorithms that track the dynamic potential in the rally to see if it's worth changing the wave count. But up until that point in time, this is normal. Now, what's not normal is I place support down here at 45.80 to 47.50 in WTI, and we got through this level here, this 45.80 today, and I think, let's see, we got to 45.23, and we're back trying to cover out of it right now. So we'll get to that in a minute, but I wanted to explain that. So here's where we are. Are we looking for new lows in wave 5 down? Yes. Still, the nearest projected wave 5 low is 35.98. If that is the top of wave 4. If that goes higher, the wave 5 targets will come up. That's the first wave 5 target. The second wave 5 target, we decisively get through this level. And let's say we close under $36. The next target would be $26.74. That would be devastating to many companies and many countries. And I think there'll be a concerted effort not to let that happen by people that are in power. That, there'll be a lot of scrambling at that point. If we make new lows under here and we reverse it on the same day and close back over that low, I'd be inclined to buy it. But I'll be looking at this move down and see what it looks like, whether it looks like it'll be complete. But in general purposes, I mean, if there's a lot of volatility and it blasts through it and it comes back over it and closes over it that day, you want to be looking to say there's at least a short-term trade in here for me to get long. And it'll be scary to get long that day. That's why you'll be paid for it. If that doesn't close back over it, I wouldn't touch it. If it doesn't get decisively back over it. I mean, it's going to be real volatile the day that it does this. If it doesn't. But so far, the odds still look good for it. If this continues up, I mean, it gets over $53, then I'd start to say, this may be out of reach. We'll have to see then, but I know it'll be in doubt. And it won't be like it is now. This is still real clear. This is a very clear wave count. We've been following it for months. So, and just a little shorter deal on it here. You can see we finished 5 legs up in this C leg. When we isolate this, it's counting it as a 5-wave move. This might look funny to you because we didn't come back to the 0 line here, but should this be stretched out across here, this was very close to the 0 line. Now, you'll just have to take my word for it. The computer accounts for it, and it didn't like this retracement. This would have been way too much for a wave 4 retracement. But it is coming back up, and it looked like it needed to because it looked like it was finishing up a 5th wave today on this move down from 50.92. So here's why it looked that way. This is it. This is the move down from 50.92. It's counting it to be a 5th wave, and it was counting this before we got on at 8:50 in the morning. That was 9:40, 10:30. We were down here. It looked like this is a 5th wave. So 5-wave move down from 50.92 should be corrected by an ABC back up. But it should not exceed the 618 coming back up. So this is what we'll be watching here. But if I break it down even more and say, okay, well, what about the 4th wave? Is there 5 waves in the 4th wave? Because you can keep subdividing this thing as much as you want. And yes, there is. So to me, this looks pretty good. I mean, this looks like we may have it here, that we finally did it. And so if that's the case, we'll come right back and do the fibs coming back up from this 45.23 to, I thought I did those. I didn't. I kept making new lows. The 45.23 to 50.92. So let's 618 is 48.75. That'll start to the markets have a real hard time getting there. The 382 is 47.40. So that wouldn't be out of line to expect. This would be the 5-wave move down, this would be the start of wave 5, but this would be the first leg of wave 5, which is going to have the wave 1, which this is. We'll have a wave 2 up for this 5th wave, and then we'll have a wave 3 down again to make new lows. And then we'll have a wave 4 up, and then we'll have a wave 5 down. So we'll take it one segment at a time. But the fact that we can count it on 2 different charts as a completed 5-wave move down tells me that we just need to watch the retracements back up. And the first one is a 236 at 46.57, but that almost never holds. So I would say we're going to look at the 47.40 to 48.07 range would be our likely target on this. I'm actually writing that down. 47.40 to 48.05. And what happens if it doesn't fail in there? Well, we'll look to the 618, which we said was at 48.75. So that's crude. And because it is backed by larger charts on the weekly and daily, I like trading the intraday charts within the framework that they've already set up. That will keep us out of trouble. And so we're just watching the numbers. Do I know what's going to happen? No. Do I want to know what to do when certain things happen? Yes. And I'm more likely to take action if I've already looked at it and reviewed it and know what I'm looking for. And I like to trade, for a 2 or 3 day period. But that doesn't mean I won't cash in the chips if they give it to me too quick. Because the markets, the S&P does it more than any of them, but crude oil back and fill too on you. So the only protection from that is yourself and how you manage your position and your risk. And using a risk trailing stop will always get the emotions out of when to exit. They will. And that's really important. If you can get the emotions out, you'll be making better decisions.
I stepped away for a moment and to get some coffee, and I'm back. And I see some questions in the chat box, and it's been probably about 15 minutes since Richard typed in this question. So let me hit you with it before you get too far away from whatever chart maybe he's referring to. Okay? Is that okay?
Yeah.
Does
Sure.
Ed see this as a wave 4 rally, which is just about over, with a wave 5 to test the lows or lower down the road? Or does he see the possibility that this could be a B wave rally with then a C wave decline to test the lows or lower? Thanks. And Richard, I'm just going to assume that's the, well, what, I guess it would be...
Talking crude, it's the only thing we've been talking about.
Okay, well then, all right, he's talking crude. Okay.
Yeah. No, the way I see this is, Rich, I think this was a completed C leg up because of the velocity that it came down and the slope of this move. I think that was more than likely the wave 4 top. If that's the wave 4 top, then the projection would be for this to be the nearest wave 5 bottom, which would be new lows. And because I got a completed leg up here, I mean, I see what you're talking about. Will we get another leg up here for the C? I don't think so. I usually just look for 5 waves and see. I think we have it. It's always possible that we do these things, especially with what's going on in the Middle East now, and I think that's what put us up here. It was all the news that came out on production is finally starting to fall, and not just here, but in Saudi Arabia cut back production because they couldn't sell the oil. I mean, that's what they have to do. They can store it to the point all the storage facilities are full, and then they start running tankers. And they pay demurrage on them and fill them up. I mean, this is what they do when prices get low. I don't think they did a lot of storage demurrage in this point because they weren't sure the lows were in here. So they want to move the oil if they can. But the fact that we had production cutting back and we had all the news on the Russians going in and stirring up the Middle East, which I believe is being done because they are having severe problems in Russia right now with the way their stock market fell and the way their currency, the ruble, has fallen tremendously against the dollar in a year. Tremendous crushing of the people over there. Their economy just is totally dependent on oil, and this just killed them. This move just killed them. I mean, they were used to $100 oil, and they had it's like somebody getting their paycheck cut 60%. You know, the government over there has to take some desperate measures, and this keeping the Middle East stirred is in the interest of Russia. And I think that's why he's gone in there and been so bold. Plus, he knows he can get it away with it and not have any problems from us. So we'll see. You know, there's a big debate going on. The Russians keep saying they're taking out ISIS, and we keep saying they're not. But I think if ISIS threatens Iran, Russia will take them out. So that would be consistent with their policy with Iran. So we'll see.
Okay.
So I think, Rich, that I do think it's going to come down and make new lows. I think this might be too big of a hurdle for it. Everybody wants to think it's bottomed, and there's a lot of pressure politically and from countries and from a business standpoint that there's a lot of people that want this thing to go higher. And those interests, you know, if there's a way they can get it done, they can. But they haven't been able to get the market high enough to make me think it warrants feeling that the market's bottomed. I don't believe so, and I've had a few arguments this week with some guys I really respect that they think it's got to go up because it's going to make everybody go broke. But, you know, these markets, particularly commodity markets, are real good at making companies go broke, especially in oversupply situations like we have. And the whole deal is demand going to pick back up in Asia and in Europe? When you start to see that happen, then from a macroeconomic viewpoint, you know, I would have to give that some weight. But right now I give the charts more weight than that. Because just the way they act is kind of undisputable. That was a really sharp breakout we had last week, and we're back down on the floor again in a week.
Yeah.
You know, it's like a boxer that got knocked to the floor. It's a second knockout.
We had a $2,000 per contract day off one of our alerts. I think it was last Friday.
Yeah.
$2,000 per contract in one trading day.
Well, you know, don't get
session.
too used to that, Dwayne, because these are special days.
I know.
But that's amazing. I know you've had a lot of good calls on the crude market.
I keep telling people with the bonds, with the crude, and other markets that, guys, these are the good old days. Volatility is a gift. Make hay when the sun shines. I mean, just because there'll come a time, and it may not be until after the presidential election, but things will go back to the new normal, whatever that is. But there's just so much opportunity. Burwell has a question for you. Based on your many years in the oil business, hang on, let me scroll up. Based on your many years in the oil business and your longer-term Elliott wave work, can you say whether the decline in the oil market since the 2014 top will end in a V-shaped bottom or a U-shaped bottom before the bear market ends?
Well, that's a really good question.
Now,
I want to be ready for the V-shaped bottom.
Yeah, V-bottoms are certainly more likely than V-tops. You don't see too many V-tops.
I believe so.
Yeah, rounding tops are pretty common.
That's what I was alluding to, actually, when I said if it breaks the 37.75 low, the bottom of wave 3, it doesn't give us much follow-through and turns back up. And a lot of times it'll, you know, if it's going to bottom, it'll do it on the same day. And at that point, I'll give that more weight if it turns back up, no matter what my wave count is coming down from this wave 4. Because proven in the price, if this thing's going to go to the projections that we're looking at here, then it shouldn't be able to do that. It shouldn't be able to, let's just say it closed back over $39. I would be long.
Okay.
Would I be long big? Not at first. But I would be long looking to see if that was it. And so that reversal back up off the low is what I'd look for first. I'd give that more weight. And believe me, I give the wave count a lot of weight. But I would overlook that at that point, because the longer term thing is, when we break this low, people are going to have to make decisions at that point. Are they going to throw in the towel and start hedging their production down there? They're going to want to see some follow through before they do that, and maybe it cuts through it like butter, and it doesn't matter. A lot of times I'll see it come down to a major point like that, and then they'll sell it right around $38 or $30.25. If they can't break it during the day, and a lot of times there's a real battle line drawn there, they'll try and the bears will try and close it within striking distance and then break it on low volume overnight. And then you come in, and lo and behold, a market that they couldn't get to break during the day, they've got it $1 lower when you come in. That's the risk. I'd much rather see it break and come back up, and then I'll be comfortable, because they will have seen there weren't willing sellers down there, or any more panicky oil companies that are willing to sell their production at $37 a barrel. The market can reach a point where you're just selling your company, because a lot of the value that's left in these guys that are in trouble right now on cash flow is the reserves in the ground. If you hedge it all up down here, you're hedging in a multi-year loss for your company. Are you going to do that?
Jim from Florida says it will end. He says it will end in a W bottom, neither a V nor a U. So.
Well, and it could, and that would be more likely for a wave 3. This wave 3 is broken. We come back up and we come back down and test whatever low it is. But if it's broken initially and rallies a little bit, but enough to give you a cushion overnight, like if it gets back over $39, let's say it closed back at over $39 after breaking $37.75. I'm going to really be looking at that hard to see if I should be long, because those are the kind of things that the guys that are bulls and want to contain this thing are going to try not to let it accelerate under this $37.75. There may be enough of them to turn it right from that point, even though I'll be showing a wave 3 down from this top of wave 4 here. When we break that down, I'll probably be in the third wave coming down off this. Right now, we should be in a wave 2 up retracement that we talked about. And that wave 2 up, let's see.
Richard says
coming because we.
Go ahead.
No, that's it. I'll just let it.
Richard says, I believe your count is correct with fourth wave top for crude in with a 5 to new lows to come, which should lead to the S&P making new lows, which is what I was asking about, the S&P making a wave 4 high and then testing or making new lows.
Okay, yeah. Let's take a look at that, because I was just going to go on to the S&P.
Okay.
Yeah, because the crude count is clean to me. It just looks too clean. This thing, this is typical
as
S&P.
in it's manipulated. I mean, there's several guys out there that claim, crude in particular, there's some code, and you can, one's a time code and one's some other kind of code, but that there's shadowy characters behind the curtain, and they control every tick back and forth of the crude market, like a master puppeteer. Now, do you believe any of that stuff?
Well, I'm in David's camp as far it takes somebody as big as the government to do it. But I'm more believing of that than David.
Okay.
Because I have traded the gold market for since the 70s. And it's doing things in the last couple of years that I've never seen it do. all these years, 30 years.
Right.
What it's done the last couple of years is breaking all the odds. And I'm just going to put something up.
Okay. And I'll share with you something from Casey. He says, I believe, and we've talked about this many times, I believe the problem with Elliott Wave is how do you trade it? I agree that it mirrors the market, but it seems that all Elliott traders are able to identify the wave structure after the fact. So, I mean, that's nothing new to this discussion. We've talked about that many times.
Of course. Of course. Look, Elliott Wave has its limits, but sometimes it's precisely, we haven't been fooled on this crude move at all. I can take you back through my reports and show you what I thought was going on when we first got into trouble up here, and I even showed you where I said to go short in here around $93. Mm-hmm. When this is a break, I mean, when I got this break right here, I wanted to get on board, and then when we broke this level, it was confirmed. You know, we were going lower, right. And still, even when it broke that level, it went sideways for 3 or 4 weeks, and then it broke apart. But
our sell signal came in June of last year. This when we got our sell signal, June of 2014.
Yeah, you're ahead of me because I didn't get it in June.
When
I
did
watched
you get
this
it?
Wave 2 rally. I was looking for it, and then what I'll do is I'll look for reaction lows here to get short, because we counted 5 waves on the top of it, and this made us suspect. We came down and we held right in here, but this was wave 1 down, and as Elliott goes, here's how Elliott can be useful to you. You got the wave 1 down. It bottomed at 91.24. So when 91.24 breaks, you got to be ready to go, because that would be confirmation that you're entering wave 3 down. Wave 3 down in a move that was as big up as this was is going to be a doozy. So we knew at this point. You can say, how do you use Elliott Wave? Or
is that a technical term?
This is how you do it.
Okay.
When it broke that point, I knew I had to get short, and that point was well defined. And we was 91.24. Okay, we hadn't broke it, and there we broke it. There's the week we broke it. Okay, and it broke it on that week. It dropped to 90.43, and then it came up, and the next week, and it was like a dead week. There was hardly any change from week to week. And then this week had a little bit of an up week, but it couldn't get above that high. This is one of the signals that I'll use. I mean, I have a lot of different signals that I trade within Elliott Wave. They have nothing to do with Elliott Wave. But this is a short signal, so I'm not going to take it to the long side. It even has a little name there to it, telling me. So I'm not going to take it to the upside, but I am going to take it to the downside, because we got this break here, and then we went sideways for 3 weeks, and then we broke the bottom, which was 90.43 of the first break. We entered wave 3 of wave 3 down. This is over with here at this point. I mean, you got $10 move in like a week and a half. It's over. I mean, this is what you expect to see in wave 3 down. They are rip-away moves. They are the reason why you have to use reaction low of wave 1 to get in. If you're already in, you know, Dwayne, if you got short up here, you could double your position down here once you were confirmed on the break. Okay, these 3 sideways moves here, 3 weeks of sideways movement after breaking that, showed that they were trying to hold the $90 level. But they all lost out right here, and there were a lot of people that got in this 3-week period trying to hold 90. That was a big number, and they lost control of the market. They just lost control of the market, and that's what it'll do. And it's so. Do we know it ahead of time? No. Do we know that's the potential entry into wave 3 down? That's the confirmation? Yes. So we got to be in there. We don't see any of this, and we don't see any of this from to the right of the cursor, okay? What we see is that we broke the bottom of wave 1, and we haven't really broken apart yet, and we haven't been able to rally for 3 weeks. And then we finally broke it. I got my warning signal right here that this was it. This was a short sale, and it didn't look back. They tried to hold $80. See these here? They got to 80 and bounced. They got to 79.78, and they bounced it back up to where's the close? 82.92. So they bounced at $3 off the lows. Then they went sideways again, still trying to hold $80. Another one trying to hold $80 and not letting it fall through. They lost control again. This was another short sale. So is this. So I had a lot of signals in here to go short, because in wave 3, that's the impulse of impulse moves in Elliott. That's where the most pain and the most gain happens. And it's a very emotional move. It's totally disruptive in the market that had been predictable. Wave 3s are the waves that you can't miss if you're an Elliott wave guy. So you can miss them, but you don't want to miss them. They pay out so much more because there's not much congestion that goes on them. This is a weekly chart. So anyway, this is no thing. So I won't tell you it's predicted, because the software can change its mind if the thing goes too far. Therefore, like we're talking $53 in the upside, that would bother me. That would make me lose confidence that we're going to make new lows under 37.75. I'd start to look at the whole thing again. Would I change my mind? Not totally, but I know it's going to be a stretch to get 37.75 if they get it over $53. And that's what I said when I put up my thing last week. I showed them, I've been talking to them, $53 is the key. As long as it doesn't get over that, we're going to make new lows. So hard to say when it races up like that, but that's what, I just showed you what I wrote. I've been writing that for a few weeks, that I didn't want this congestion to break out to the upside and get over $53, or I'd relook at my wave count. Otherwise, I'm not. It's just a rule I go by, and I know the wave count can be wrong, but I have to see some kind of confirmation to feel that way. And I'm not going to bend off my emotions. I'm not going to bend off fundamentals unless it's something that I know for sure about and have lived through it and traded through it before. Maybe that will get me to do it. So on the S&P, I guess that's where we're at, Dwayne.
All right.
So I don't want to be defensive about Elliott Wave. It's got its problems, but it gives me the framework to trade my own stuff with. It gives me the framework to have one more bit of an edge on the market. And I just know that wave 3s are a joy to trade if you're on the right side of them. So I always strive to never go against that, period. And if it turns out that that was the top and it ends up being an ABC up, so be it. I might miss the trade. But that's okay. If I don't lose money and I miss the trade, I'll be around to swing a bat another day. And there's certainly enough opportunities in the market that I don't need to do anything. When you can realize you don't need to do anything, you can take a lot of pressure off yourself. Because you don't want to do something because you don't want to miss something. I do get excited around these wave 3s because I absolutely don't want to miss them. And I make some mistakes around those time frames. But I've made a lot more money in them than not being in them. So that's what's burned into me from my experience. So when we look at the S&P here, this is another short signal below the low of that bar. Of course, we haven't made it. That was the 1831 low. But I got the same warning here as we got when we were looking back at the crude market. Remember I showed you that short bar. Even though it's big, the market has been able to collect itself and come back up. And Dwayne, you asked me about something here, and if anybody wants to see this, let's see, how can I get to this? I don't think it's there. There I can. There it is, the U.S. Department of Treasury. Mm-hmm. The President's Group President's Working Group on Financial Markets releases money market funds report.
Okay. Now this is from 2010.
The President's Group on Working Markets now requests Financial Stability Oversight Council established by the Dodd-Frank. Oh, and this isn't the one I wanted to see. I wanted to show you the one. The President's Group, this thing was set up by Ronald Reagan after the market crashed in 1987. It was set up and authorized the Treasury in concert with the Federal Reserve to intervene in the S&P 500 futures market to stabilize the market in emergency conditions with whatever means they needed to do, with unlimited credit, with the ability to come in and buy futures contracts to keep the market from collapsing overnight and going to zero. Reagan created that thing, and it was hardly used, but they did use it in 1987. They did have to use it. He created it right after that because he said, I don't want some computer programs to collapse the economy of the United States of America. And so he set it up. But I believe it's been used a lot more frequently as of late. A lot more frequently as of late. And I don't think they just are I don't believe they're just limited to the S&P futures. I think it also includes the metals markets. And I don't know what else it includes. But they're there, and they have the authority to do that. This wasn't the exact thing I wanted to find on it. So you're referring to the plunge protection team? I just wanted to make that point because we were talking about it. So,
is it the plunge protection team that you're referring to?
Yes, that's another name for it.
Okay.
Yeah, PPT. And they're watching the markets 24/7. They have people staffed around the clock to watch this thing. And you wonder why, we came back up here this month here. Well, they were busy. And notice how they're adept at making the market make higher lows. We've had 3 months in a row of higher lows. And now we may have, for the first time, since we made the record high at 2134, we might make a higher high this month. We'll see how we close the month. Because the high of last month was 2021.50.
Yeah, I'll get Michael.
So far we're at 2014.75.
I'll get Michael to start the meeting.
So
he likes to go first. Anyway,
my belief is that we haven't reached the zero line down here, so I got to give the market more time to put in wave 4. I think it'll run into a lot of selling anytime we get to the lows of any of these bars, the 2034 on up to 2057. This is going to be a real congestion period for the market, but they'll get excited if they get it over 2150. If they're going to be able to move the market, they need to get it through that. Until they do that, and we can see what that picture show is going to look like, I still think the path of least resistance will be to the downside. Now, I will tell you, I said some things in my weekly report about the S&P. It posts its largest weekly gains since February. Prices, it held 36 points above the weekly projected low, which is that's a big miss. And then it turned higher and went 29 points over the weekly projected high. And I made the point, it's not uncommon that when one projection is not reached by a significant amount within the first 2 days of the week, the other projection is exceeded by a similar amount. And, that's kind of how I use this thing. I mean, when it misses big, it usually blows the other end out. Just knowing that ahead of time gives me an idea what to expect for the other 3 days of the week. The S&P, like crude oil, ran out of time to break down as the bulls took over for the near term. Price appear to be in a B leg up of wave 4 down on the monthly chart, and should eventually turn lower again for the C leg down, provided the 2067 level is not exceeded on a closing basis. So I always want to put my measuring points there where I'm wrong. Okay? You need that if you do Elliott. You need to be able to know where you're wrong. In any case, near-term charts favor higher numbers this week. However, this current up move could be completed soon, and I really think it probably will be. Key resistance remains in the 2018 to 2030 range. It has not yet been necessary to change our larger targets, which remain in the 1601 to 1726 range, as previously mentioned. So that's what I'm looking for that C leg down. It will be a 5-leg move down. It'll be a 5-wave impulse move down when we get it. So, let's see. So I mentioned that initial support is located in 1978 to 1993 area, while key support is located in 1919-1955 range. So we didn't quite get to 1978. I think our low for the week's 82.5, 1982.5. Deepening global recession continues to keep the downside risk at elevated levels. However, the market is more focused on the lower probability of Fed rate increase at this time. They are. But that's already built into the market now. So the market's going to eventually have to do something on its own here. So where are we in this sequence here? This is tricky. I have to tell you, I'm challenged by it because this looked like it was the 4 up, and this looked like it was going to be the 5th wave down, and it got aborted. You know, it broke the 618 coming back down. This was probably the plunge protection team. I mean, I don't want to say everything to do with that, but I think there was a force that came in here and pushed the markets. I mean, that force was buying. That was caused by buyers or a big buyer.
Yeah, for the market to climb.
I know the PVP team operates through 3 brokers.
For the market,
we used to be able to track them better when we had the pit.
Yeah, for the market to climb, you're making a good point. It requires financial commitment on the part of somebody, you know, whether it's an institution, a group of institutions, whether it's the government. Now, for the markets to fall, all it takes is for buyers to stop buying, and the market will decline on its own. But to see that kind of an upside move, somebody is getting busy, real money.
Right. It would have been very normal for it to follow through under that and go on and complete wave 5 down, and they didn't let it happen. And this just builds confidence in the bulls. You know, the longer they can stake it out here. Question is anybody going to want to buy it up in these higher levels? Is there going to be enough buying to push the market higher? There will be on the Santa Claus rally, but where will the market be when we go into that is the real question. And I'm really friendly toward the 4th quarter seasonals. I think they are good, you know, particularly as we get closer to December. But it's going to take more than that in a year when we have all this extraneous stuff going on, too.
Well, over the weekend, I read a series of articles or scanned the headlines. Oil set to soar, blah, blah, all these different reasons why oil prices were getting ready to just go through the roof. And then we opened Monday, and we had a $2,000 per contract down day, if I'm recalling it correctly.
Right.
What happened? Yeah. I mean, it was a government holiday, Columbus Day, so maybe the PPT doesn't work on holidays.
Oh, I think they really work then. You know what I've noticed lately too, Dwayne, is when we have a weekend that events are occurring in Europe, or they're worried excessively about the Chinese market or something, and they're making reports on Sunday. I noticed we have a lot of Fed speakers come out, like 4 or 5 on Monday, on the high-risk weekends. They'll be out there. 4 or 5 will be scheduled on the crazy Forex news stuff that you'll see that it's really it's remarkable, really, when you go back and look at it. I started knowing this lately. There's more Fed talk than ever, and they're scheduling these press conferences around times when the market's at a critical point. I can see it, and they get them on the schedule. They must have a hotline to these guys and say,
the IMF, the world stage, is begging America to please go ahead and do the interest rate thing and just get it over with. And I saw an article the other day that said not only may the Fed not raise it, they might go negative.
Yeah, I read that too.
Is that even possible?
Well, yeah, they've done it in Japan. I don't know if they've ever done it in Europe, but they've done it in Japan for extended lengths of time.
Well,
I think they got as low as charging
13 years in Japan, and it didn't fix anything.
It couldn't fix it.
When they started raising rates, surprise, surprise, they started to climb out of the hole.
Yeah. Yeah, well, I think there's a lot of dynamics there because the IMF has been begging them not to all this time for them to come out and talk like that. You know, you wonder why. They think they're getting beat up because everybody, the other currencies, if they come out and cause our currency to rally from here, you can already see in the earnings, almost every earnings report of the global companies in our country are complaining about. We lost profits because of the strong dollar.
Yeah, this is going to be a bad earnings season.
Report.
Yeah, bad earnings season already with Walmart and Netflix. And now, did you hear that Ben Carson has had his medical license revoked?
No.
John B. gave me a link, so I'll chase it down.
Did it just happen?
I don't know. It's from a reliable source, the Huffington Post. So.
Oh, God help us.
Let me just see.
Totally unbiased.
Let's see what this says. Ben Carson loses brain surgeon license after making numerous brainless comments. Aw, come on. You, John B., you set me up for that one. The medical boards for all 50 states in the union announced today that they have revoked Ben Carson's medical license and will no longer allow him to operate as a brain surgeon anywhere in the U.S., and they cited as the reason Carson's mental and intellectual challenges, otherwise known as the propensity to sound like a total and utter nutcase. That's something like you would read on the Onion.
Half the population will believe that to be true.
I know. You're absolutely right.
That's why they do it. And we live in that kind of country now. People can't think for themselves. They don't want to. I mean, half the population doesn't care.
Let's see. I guess this is probably pretty funny. Let's see. While appearing on the Really Bad Situation Room with Wolf Blitzer, Ben Carson said, "I'm very disappointed to hear this news, and I categorically deny that I'm crazy. I think this is a concerted effort by Dr. Gregory House, Dr. No, Dr. Who, and Dr. Doolittle to undermine my candidacy for the presidency, and I am therefore going to ignore it and carry on with my campaign regardless." You go, Ben. In his defense, Carson also highlighted comments made by other Republican candidates for the presidency, too. Listen, Donald Trump thinks he can deport 11 million people back to Mexico and then get Mexico to pay for a wall to stop them coming back in. Carly Fiorina believes she can run the entire United States of America even after running little old HP into the ground. And Ted Cruz doesn't want to work with Democrats to get things done, and yet he told Fox News in 2012 that he's prepared to work with Martians. I mean, seriously, if I'm a Looney Tune, these folks must be too. Unfortunately for the Republican Party, Carson's assertions have been borne out by the latest Real Clear Polydocs opinion poll on the question of which Republican candidate is the most crazy. Ben Carson is tied in equal first place with Donald Trump, Carly Fiorina, Ted Cruz, Marco Rubio, Jeb Bush, Chris Christie, John Kasich, and Rand Paul. The poll was conducted earlier this week. It had 330 million respondents and no margin for error. and you're right. People will read this and believe it. There's nothing on the page that says this is satire.
Those guys ought to sue the Huffington Post.
Oh, way at the top it does say Huff Post comedy. Okay, I did that, but it's way up there.
I'd like to see him do one on the Democrats, huh? Let's make it even. But when they say over 90% of the journalists are liberal.
I believe
that's why we get a fair press thing here. We also I don't know if you've seen that thing going around on the internet about the people that are executives in some of the major news media, and I mean major, that are linked up with people in Washington, on a marital basis. It's just shocking. I don't want to say anything more about it, but it's just, you can't, there's no way you're going to get a fair read out of the news media in this country. We haven't for years. And you know who I blame it on? I blame it on the conservatives that are rich that didn't go out and fail to buy media companies like the liberals did. They've let it go all these years, and they had a chance to at least make it, halfway even, and they didn't do it. That's who's to blame. I hate to say that. People are going to be what they are, but, I blame them just as much as anybody.
Yeah.
Anyway, where are we at? Let's see. That's pretty interesting, Dwayne, but all those kind of little things, you look at when people don't even know who's in control of Congress or which party and who's blamed for the Affordable Care Act, more Republicans than the Democrats. Then you put something like that out all over the liberal media. They do stuff like that, and these people go for it. They read the headline and they're on with it. So that's what you got to overcome to win. I have to say, Carson's a smart guy, though. He's a lot smarter than I'll ever say he would be. He is a pretty sharp fellow.
Yeah,
so, anyway,
but he's not Batman. He didn't swoop in with his limousine and stop the guy from getting. You heard about that, right? This goes back to 1991. Some guy was getting beat up with a bat, and Donald Trump, when he was married to Marla Maples, they were headed to some event in their big limo, and they passed by some guy beating another guy with a bat, and so Trump had the limo stop, and he gets out of the car and goes, "Hey, put that bat down." And the guy goes, "Oh, Mr. Trump, I wasn't doing anything." And he goes, "Well, yeah, you kind of were. You were beating that guy with the bat." And so he said, I've never tried to make anything out of this. I just, wanted it to go quietly into the night, but somebody's dug it up now. And so now he's like the defender of Gotham City. If there's crime in the streets, you can expect the big limo to glide in, and I don't know.
I know this, and I like his. I don't like his polish, but I do like his ability to say what he thinks. Not necessarily the way he says it, but we're to the point where we need somebody who can stand against these clowns in Washington.
America's had so much political
everything.
correctness. We've had so much political correctness. I think everybody's just ready to throw up. I mean, it's just too much.
Yeah.
I mean, somebody really needs
to
just...
it's way too much.
To stand up. Yeah.
They're gonna. I'm telling you, they're putting everything electronically in place, and then they're gonna regulate how many times you can go to the bathroom in a day with these stupid water meters. I mean, am I worried about? I'm not. I'm just saying, why are they putting all these things in place? That takes a lot of money to change out. I mean, I'm in the fourth biggest city in the metropolitan area in the country. It takes a lot of money to change out all the gas meters and water meters. Companies don't do that on their own.
Okay, so what do you think that? I may have missed that part of what you were saying. Why do you think they changed your meter?
Oh, I think as a bigger scheme of things, it can be used now to see exactly how much utilities that you use on a daily basis.
Yeah.
And to limit you at some point when our resources get scarce, this is what they're going to do.
Well, I
think
the
water meter,
the
gas meter.
The reason they replaced, I think, they came and put a new electric meter on our house, but I talked to the guy when he's putting it in, and I said, "Well, what's up?" And he goes, "Well, it used to be that if we wanted to turn off electricity or turn on electricity, we had to physically go out, and throw a switch or something." He says, "But now it's all computerized."
All right.
But additionally, yes, you're right. They can track down to the nanosecond how much power you use and all that.
Well, what they can do, they can throttle it, just like they throttle the internet, the broadband.
Yeah,
they'll throttle your water usage.
I just don't think we don't have. There's no shortage of electricity. I mean, in the summertime here, my electricity bill, it gets real close to $600. So I mean, they're making a ton of money off of me. I don't think they want to throttle me. I think they just want to charge me. I think they'd like to charge me $1,000. Is what they'd want to do. So I don't know. Maybe you're right.
When things get when you may not be affected so much by coal, but in the Northeast, they're going to be really affected by these coal plants going down as the population increases.
Well, I mean, we have the heat problem out here. I mean, people would die in this heat in the summertime just as people would die back east in the wintertime. Yeah. So,
right.
Are you showing any more charts today, or are you done?
I wanted to just show something on...
sure, you bet.
Let me see. Where we're at here,
did you already give an S&P review? I see Jeff typed in.
An S&P review is, on the monthly chart here, we're still pulling back in wave 4. We haven't reached the MACD 0 line here, so we haven't made a wave 4 minimum retracement. We can get here to the 0 line by going sideways for a few more months, or we can get there this month or next month by diving back down here and taking out this low. We'll be close to getting to the 0 line, if not there. It depends on the time frame that it happens. So we're still looking. I have to assume that this is the case, that we're going to need another leg down. The 84 says the chances that if this is all the rally we can muster, this 84 says chances are very good of us making this move down, which should at least get to the 382 here at 1726, or the 50%, 1601. Both of those were the numbers I read in my report. That's the sweet target range. If it's a really bullish market, it'll hold here at 1726. That's fine. I just want, when this thing reaches the 0 line, the antenna goes up. I probably will be keeping a close eye on the market later at night at that point, because it'd be just like them to bottom this market in European trading now. It wouldn't surprise me. I mean, if the reason we're coming down is because of the global markets, the global stock markets of Europe and Asia, then it stands to reason if they're panicking and going to put in a low, they'll do it in their trading hours, and we're going to be following them more than likely. So we might reach our lowest point at that point in time. We'll just have to see, or somewhere around our open, somewhere around our open can happen too. So this is the bigger picture. That's what we're looking at, and it's not the cleanest of the clean. Okay, it's not. But when I look at this, it looks like we needed this one more move up here to take out 2014.75 for wave 5 up. This would complete a 5-wave move up off the 1861 level that we and I think that was last week. So we made, this will be the 5th wave. Where will it end at? And that's why the important points are that we said, that I said earlier, I'm not going to put my thing back up there, that the key resistance levels are located at 2018 to 2030. 2018 to 2030 would be that. This is targeting higher numbers. So we'll see. It looks like we came back. We got to the 0 line. We actually went a little bit below the 0 line down here, guys. When we talked about the wave 3 peak, you can come back to within 10% of this 0 line. Most of the time it'll hit the 0 line and even go negative, which it did here, and we did that, at noon today. I guess that's today.
Richard,
no, that's yesterday. Yesterday.
Okay, Richard asks, can you show a count from the late September low, B-wave low, which could be a 5-wave count to complete the C of wave 4 up? I can't even believe I say this stuff because it's I just so much don't understand it.
What did he say? The late September low?
All right, let me read it. Can you show a count from the late September low, which could be a 5-wave count to complete the C of wave 4
that's
up?
just what I was showing. I'm going to bring it up again, but here it is. Here's the late September low, and here we are today.
All right.
So when we look at that, and that's a daily chart there. When we come and look at that, the count is this. Here's the count. The late September low, 1861. Okay? and I was monitoring this for pullback. I couldn't even get to the 382. So I don't need these things anymore. I'm going to just get them off my chart. There we go, new highs. This is what the market should do. It came down to this fourth wave yesterday. It hit the zero line, and we're coming right back up. So that's acting normal. It doesn't always. Sometimes it goes right through the zero line. You have to go to the Fibonacci retracements. We couldn't even get to the 3, which means we should easily make new highs, which we're right on the high now. 2014.75 was this reaction high of wave 3. So we're going to go through that. This is the fifth wave Richard was asking about. This is the 5-wave move. Yeah, that's why I think if it stalls in here between 2018 and 2030, I'm okay with it. You know, that'd be a good target zone for it to peak at. But if I break it down just from the bottom of this low here, and that's going to be, if I want to look at from the bottom of wave 4 and micro manage this thing and see, you know, from yesterday to today, here's the bottom of wave 4, 82.50. So it looks like it's going to be about a 14-minute chart. So we're in wave 3 of this fifth wave up, of the 5-wave move up off the low that Richard's talking about, the late September low. So there we are. We just made new highs. Okay. We went above this. We're in wave 3 of this up. So what would I look for here? Well, right now, you know, I'm backing off waiting. Would I buy the next dip? It depends on how quick it comes down and where it comes, but it should come down to the zero line again after it fights somewhere in here. And I got my first level in there at 2018. That was kind of a target, you know, of resistance. And I put it from 2018 to 2030. Key resistance, 2018. So, and we had mentioned that, I mentioned that it looked like it would go higher this week first. But I also think it's still going to turn back down. It has to get over 2067 before I'm going to start pulling my hair out on this wave count. I'll tell you right now. I got to give it that much rope. So
on the S&P, let me just say, guys, on the S&P, we're rocking and rolling up to the next weekly trading zone, which is 2020/2019. I'm going to show you guys here in a few minutes just how well price has respected the zones this week. It's been nothing short of awesome. So
here's the fifth wave of the fifth wave, Dwayne, okay. And it's still in wave 3 up. So I broke that thing down to a 2-minute chart.
That's S&P. Okay, gotcha.
Yeah, I'm still staying on that beast because there you go. 2-minute chart. Pull back to the 2-minute zero line. We'll make new highs again. More than likely, it would do that. That's a very high probability trade. So what I can do, you know what, I'm just going to set it up. It might happen while we're talking. That I would go over here and I would set this thing up on here for a 2-minute chart so that I don't need to sit here and watch this thing. And when it comes down to, you guys can't see this thing that I'm setting. I'm just setting my zero line. So I've set the alert in there now that when it comes down to the zero line, why this thing didn't turn it on for me? Sorry. There it is. It's because I set the wrong line. Okay, there's my zero line. All right. I'm going to get a beep when that thing hits the zero line. We'll see what it does.
Okay.
And when it pulls back. So that's the S&P. And that was the answer to Richard's question. I don't want to just talk about gold for a little bit. I think it's warrants talking about it. Gold here's a monthly chart on gold. And let me just show you what I said on it. Gold prices continued to grind higher last week as weaker economic releases do not favor a Fed rate hike anytime soon. With near-term charts projecting higher prices, keep an eye on the key 1180 level the next couple of weeks. A close over 1180 would be an early sign that the monthly chart may have put in a long-term low. The 1090 level remains critical support for this wave count. A weekly signal is in effect. So I had a weekly buy signal get triggered at 1160 earlier in the week. And this thing today is going to close over 1180. So that makes me real interested in gold. I'm actually really interested in it now because I got call options that I'm sitting on, and they're real edgy because One of them expires, I think, in 12 days, and the others have about 42 days in them. But looking at this chart, this is what we were talking about. When you look at it, even if that's not the bottom, if we just get some kind of move back up, the 382 retracement on this market, just a 382 back up, which, you know, if that's not the low, we should still make a trade, is $13.96. $1,400. You know, am I interested in that? Yes. $15.96 is the 618. So we got $13.96, $14.96, $15.96. It's just the way it works out. So for our 382, 500, 618. Now, and the projection on this chart, if that's the wave 4 low that we put in at 1072, our nearest wave 5 projection is up here at 2309. The secondary projection is 3070 if it gets over that. And if it gets over that, the next one is nearly $5,000 an ounce. Now, I wouldn't bet on that because I think the governments will be fighting it. If it does happen, though, they're going to have a real fight on their hands, which is why I think this is the most manipulated market of all. What they've done in here all these years on this slow down move, and particularly this year, several mining stocks have gotten cut 50%. Now, this market closed here when it made the lows in October last year. It got down to 1130, that reaction low. Since that point in time, it rallied here, and the mining stocks rallied. In this rally, a slight rally. The mining stocks from this point to here lost 50% of their value. And look at gold, it's hardly dropped relative to them. Okay, 50% of their value. So some of the miners are just like the junior gold miners are in trouble, like the oil producers that don't have a good balance sheet. So there's a lot of consolidation going on right now in the gold market. This is all ripe for a bottom. Will it be a long-term bottom? I don't know. Will we get up to $1,400? I think the chances are looking better and better every day. And the first thing I want to do is see it close over 1180, and we're going to get that today. Now, it'd be nice if it closes the month strong. And I think that if there isn't any intervention in this market, it would have already been over 1230. So, but the fact that it's come this far makes me encouraged and makes me feel like, you know, even in times when the stock market's rallying, we have gold going up. This is pretty bullish. So here's the latest move on gold. It's in wave 5 up. But this, and I want to show you this, it's in wave 5 up, and this is 1151. This was a couple days ago. This point here, when it was 1135, was also counting this to be a fourth wave down, and this was supposed to be wave 5 up. But the problem is it went too high for wave 5, so the whole software relabels it as wave 3. Okay? And it comes back again to the zero line in here for wave 4, which it labeled wave 4 right there. Okay? Comes back to the zero line, and it goes back up for wave 5 again. So the danger here for the shorts is, okay, is this thing going to finally be over? It's been doing this 3, 4, back to 3, 4. If this thing gets over 1200, it's going to now label this as wave 2 more than likely, and it will be in wave 3 again. So the wave 3s are so strong and powerful, they fake the software out because in the direction of the powerful trend, they'll go 3, 4, and the reason why you want to be buying the zero line on a fourth wave pullback is because it might turn back into wave 3. And wave 3s a lot of times do this, 3, 4, 3, 4, 3, 4. And you keep thinking, well, this is the end of the line. It's not. Just because it's calling it wave 5, it can go far enough. This is right on the edge of blowing this thing out. It hasn't done it yet because I took it apart again on the next layer, and I'll show you what it looks like on that 4 to 5. And I think it's still counted as wave 5 up. No, it isn't. It can't. See where the B is? It pulled it back for wave 4, and this is probably in wave 5 up. But look, I mean, you haven't been through several cycles like this on the way up. This is what it normally would do if it bottomed. It would keep going 3, 4, 3, 4, 3, 4, and you say, well, the Elliott wave doesn't work. Doesn't need to work. I need to be able to trade it within the things that do work in it, and this thing works in wave 3. A lot of times it won't work in any other wave where it keeps going to the recycled wave 3. So this is projecting the high now, 1197. And the good thing about Elliott, and this projecting high is those are just projecting 1212. The good thing about it is it always gives you a place for targets when you're in the middle of the water and you're in airspace where you've never been before in markets. You can still come up with logical points that are targets, which I can't get.
Yeah, and I do that. I do that with Fibonacci. So.
Right, and you can do it with Fibonacci too. But I like to say that this still hasn't broken down yet, and we'll see if it can hold out through tomorrow. We may have a low in here, and what would that tell you? Well, I would tell you this: we'll get our pullbacks in gold, but you'll be wanting to look for buy setups. And I could show you what I did in some options this week, but I don't think we have time to wait.
Let me see if there's any final questions. Oh, there was a question early on. Do you have anything at all you want to share on natural gas?
Well, natural gas is so unremarkable. I feel like for me to say something about it, I'm stretching myself because I don't see anything clean into it, but I will make a comment on it. I will show you something. You ask me a question, I usually have some kind of answer, but this isn't a high confidence deal. This is a longer term thing. There's a quarterly chart on nat gas. That's really important to know what level we're at when we go back from the inception of when they started trading this thing, which I believe was 1990. You can see the market doesn't, aside from when we started getting interested in this thing, and the nat gas market used to always trade between $2 and $3. Back when I was a refinery manager, we would buy we actually didn't make enough gas to run our refinery off gas, so we broke it down and sold propane, butane, everything like that. We had all the units, so we would buy our gas because it was cheaper for us to buy it from the utilities. And you see, this thing this went between $2 and $3 for all this time period here, almost 8 years until it finally broke out. Then we got to a higher range here, but it still always had this floor down here around $2. $2 was always a good place to look at for the long term. And if you trade any oil, any gas stocks, the gas producing stocks, they're really cheap, and it could still come down to $2, but I don't think it'll stay under it very long. I really don't believe it will. I think from a value play, you can look at this and say it's close. From a technical angle, there isn't a lot to say about it. I'd rather see it start to make new highs over at least some weekly highs or monthly highs before I get excited about it. And it's just the safe way to do it because it hasn't been able to do a whole lot here. Here's a daily chart. Today's price action is so typical. They had it up to the highest point it's been in 2 weeks today. They put out the inventories and bam, now it's almost back to the lows for the last 2 weeks in a day. That's no market to play with because first of all, you don't have enough room to play with it. I mean, those things are coming out. Why mess with them? And here's the wave count on it. So whoever asked, your wave count here says, we're coming down for wave 5. We should break 240 here, 240 reaction low, which is a multi-year low. I think that's a 7-year low now. And we're projecting, the first projection is like 237, and then we got some at 224. So that's your current count in it. I don't make a lot out of it, Dwayne, because I don't like. It's not clear enough yet for me, but I've got my eye on it.
Okay.
And that's all I can say.
Oh, Jim says, wait one more question. Your favorite, the Aussie dollar. You're getting some of your money back. I am long, only 6 contracts. Your view, please.
Well, it was my favorite, and I'm still holding my option position, and I bought some more actually recently. I can't tell you that.
You're long the Swissy too, right?
Yeah, I'm long options on the Swiss franc, and I'm long options on the Australian dollar.
Okay. Anything on corn?
They expire in the middle of March. Okay. I don't consider myself wrong until then, and if I do something with them between now and then, we'll see. I sold part of my Swiss position out and paid for my core position in it, but I recently bought some more because it's come down too. Let me get a grab on it here.
And final question today, corn. Do you have anything on corn?
Corn.
Carson, the software that Ed is using is what's it called? CQG.
Commodity Quote Graphics.
Which runs you about $600 a month. Is that right?
Without being connected to any live markets. Yes.
Oh, okay. Yeah. If you want actual data flowing through it, then
it's about $1,000. I have a couple. I probably got a couple extras on there I pay premium for, but it's about $1,000.
Yeah, my bill with TradeStation got up
to $2,000 a month if you really want to use their stuff.
TradeStation got up over 300 with me, so I became a certified TradeStation developer to get it down to practically nothing, and I don't use it anymore. The DT Pro platform that we use is free. If you have an account, it's free. It doesn't cost you a thing for charts, for data, nothing. And it does everything that we needed to do to accomplish what our goal is each and every day, and that's to teach people how to make $100 per contract per day. I mean,
hey, Dwayne, I think they started charging a small fee for data.
Oh, with the exchanges, you have to pay. It's 18. It's 18, and that comes from the CME. Daniels is not trading that. The individual brokers aren't charging it. It's an actual fee from the CME itself. So yes, you're correct.
Which is really a bang up deal because they get the CME connected to this thing. Costs a couple $100 a month.
Mm-hmm.
But when you've been trading it with it, I've been trading with this platform since 1985.
Changing platforms is like a major life event. Number one is the death of a loved one. Second is marriage. Third is divorce. And then fourth is changing platforms.
Especially if you've got your lifelong programs that you've programmed into this dumb thing and they don't give me the interface to transfer it to anything else.
Yeah.
I use their API to do their stuff, and then they got me locked up. Anyway, let's see. The Australian dollar, I'm trying to get to it here. Okay. DA6 is my symbol. And, the charts, I can honestly say, don't look good. But I did this for insurance purposes, and I'm using any excuse I can at this point. But, I put them on in here about at 77, 78. And then I put some more on down here at 73 calls. But the expiration date on them is out in March. So you get a lot of coverage for the money on these things. One of these contracts is $73,000 of US dollars. So on one contract, it's cheap insurance in case something happened to the dollar. Which the only thing that's been happening to the dollar has been getting stronger lately because of those inflows from Europe we were talking about, and they have been real, and that's why we are where we are. So this is the Aussie dollar. When I look at the quarterly chart, the only thing I can say is I didn't expect it to come back this much, but I knew the timing on it wasn't necessarily important to me when I made the decisions in here, and that looked like it was some kind of bottom, but it wasn't much of a bottom because we impulsed down again. So as I break it down on the monthly, we might be getting close to something here on the weekly. It still shows wave 3 down. Okay, but if this was the bottom of wave 3 and we went up for a wave 4, we should see a rally into the 75 to 78 change range. Somewhere in there would be a normal wave 4 bounce in here. Okay, on the weekly chart. Now, here's the thing with Elliott. Even though it's counted as a 1, 2, 3 down here, if it goes too far, let's say it comes up over that high. I mean, we'll define it later. It'll have to be over 80, though. I know that. But it gets up over 81.51. It will start to look like, we've got a high in here. We'll be starting to approach this level that we shouldn't exceed for a wave 4. And if that happens, this will be labeled an A by the software, and it'll do it in an instant. Some of these things, if you're counting on them, you have to know where it's going to go wrong at, or you can't use them. So this is an A, that's a B, this is a C. That will all be labeled that way, and this thing can be off to the races and will have bottomed, and it has no conscience to come back and confess its sins. It just relabels an ABC down, and it's over with, and you're up here. Well, we all know it's over with then. But, so we got to watch these critical points on the rally here, and let's just look at the daily chart. We may not even put in the daily bottom yet. It looked like we were close. I thought this was going to put in the daily bottom. It still could be labeled that if this comes too far. So let's say what too far is here. Let me just do it, Wayne, and get this done. But it's a good question because, I did throw that out there, and I just told you what I was doing. I was saying I'm not recommending you do it. I'm doing it for insurance purposes on my portfolio, which they're not going to announce anything to us when a big move happens. So this thing, okay, it's got up over the 50% point. It gets over the 618 here, let's say it's 74.50, and closes over that. It's going to start to threaten this wave count and look like this may be done, to the downside on the daily chart. That doesn't mean it's done on the weekly, but we would look then to these retracements on the weekly chart to see where we're going to go. And that would be, 74.69 up to 78 change would be likely. But, this won't change. If the daily chart changes to a 5-way move down, it'll just mean that this leg here is, well, it could turn into a lot bigger move. Let me just say that. It could, actually. At that point, I'd have to take a look at this and run it back to here for retracements, which would be significantly higher for a 382 from that. So the 382 on that would be up here at 78.96. The 50% point would be at 81.76, and the 618 would be up about 85. So you see, this is just as real as the 1, 2, 3s. We can't put any more faith in them than they deserve. We have to see this bounce and where it terminates at to determine whether to even use that count. Because the market could bottom, turn into an ABC on this chart, and we're going back over 90, maybe 95. We might go a lot higher. We might make new all-time highs. The record high in the Aussie dollar, I think, is like 111 or 112. So you just can't tell what it's going to do. But the Aussie's been killed by the Chinese problem. They've really sold off their market with the Chinese stocks, and they sold off the Australian dollar because of that, and they sold off the Australian dollar because it's a natural resource-based country. They're the big exporter of natural resources to Asia. Really, to the world, they're the biggest exporter of all the mining and oil and gas, and they're really big in that stuff. So this is your commodities. If the commodities bottom, there's a very good chance this thing will bottom. Let's skip the fifth wave. So,
gotcha.
How's that for a quick answer to
Sounds
a short
good.
question?
Hey, does the sound sound the same as when we started?
Are you asking me?
Uh-huh. Yeah.
You sound the same.
Okay, good. The reason I ask is I've been using some studio headphones, which were really good, high-quality headphones. But, man, by the end of the show, I feel like I got cauliflower ear. I mean, they're really good, but really heavy. And so I just switched out the deluxe headset for some Maxell stereo earbuds that I think I paid $4.99 for. So I'm still talking through the Big Shot microphone, the Heil PR40, but instead of having 50 pounds sitting on top of my head, I got these two little earbuds stuck in, and I think I'm loving it.
It's a lot better, huh?
I think I'm loving it, yeah. So.
Yeah, that's great.
All right, my friend. John says, but the sound is still okay. No, I didn't do anything to my... I'm not speaking differently. The headphone jack doesn't affect the audio jack. I just wanted to make sure that there wasn't any leakage out of the earbud. Because, see, that's part of what the studio cans do, is they really just make sure nothing leaks out from your ear. But if I sound like I have a little more bass, well, that's pretty good because, I've always wanted to have a very good voice.
Think you sound as good as I've heard you sound.
John goes,
really,
it must
crystal
be
clear. And there hasn't been any, noise.
John says, must be the power of suggestion. It really sounded different. I'm telling you, I am the most susceptible guy in the world to the power of suggestion. I mean, okay.
Well, Dwayne, I have got to jump right now.
All right, buddy. No
I got to tend to this gold position I'm in. They're flirting with the 1180 level here, as the S&P stopped at 2017 so far, but it's not done yet. So we'll see if it pulls back.
Let me grab these charts back. So listen, you take care. Thanks for everything. We appreciate it so much.
Thanks
guys,
for all the questions.
If you ever have any questions for Ed, you can just email them on over to me, and I'll pass them along to him. Okay. All right. Thanks, buddy.
Take care.
All right.
Thanks.
Bye-bye now. Okay, and we're back. Okay, so let's go real quick. We're not going to drag this out. Oh, let me mute him on his end. Or is he gone? He's gone, so I don't have to mute him. Okay. All right. Let's go through these Concierge Trade Alerts quick. And then I will, later this afternoon, time permitting, as I've been doing the last few days, I will come back and do a very short Concierge Trade Alert recap where, because some people say, well, gosh, I got to wade through the whole radio show to get the alerts. You do some before, you do some at the end. So last few days I've been trying to encapsulate it and do just a small recap video right at the very end, and I post that on the Google Plus page and on our YouTube page, and I link it from our Twitter page. So I don't know what else I can do. But let's back up for a moment and take a look at Sunday night. Okay, this was the Globex Open. Now, I do the Concierge Trade Alerts before I do the zones. I probably should flip that around, but people are anxious to get the alerts because they want to trade and go to bed. So it's a conundrum. I sent out the alert to be long above 2010, but then when I got around to doing the calculations later that evening for the weekly trading zones, well, here I had a zone right at 2012.13. So is it any surprise that this move stopped at 2012 and again at 2012 and again at 2012? No surprise at all. This was a Concierge Trade Alert, and it was the free trade for Sunday night. Okay? Then as we roll into Tuesday, we went from zone down to the zone. So that's 2012 down to 2000. So that's 12 points down. 12 back up's 24. 12 back down's 36. Okay? It's 36 S&P points. Zone to zone to zone to zone. 12, 24, 36. Now, price has been doing the same thing for the last 5 years. The first time we publicly published the weekly trading zones was December 14th of 2009. Okay? Nothing's changed. You can Google CFRN weekly trading zones. You can get articles. You can get, if you click the images tab at the top of the Google search page, you can see charts going back for years. It's the same thing. Price goes from zone to zone to zone. When price gets to a zone, we expect one of three things: consolidation, rejection, or what I call a hot knife through butter. See, this is rejection. This is consolidation. This is consolidation. Consolidation, consolidation. Okay? And now these are this week's zones. Okay? Now, here we come into this zone and we go up and we tag. And I made a mistake the other night. I said I put out a Concierge Trade Alert to be long above 2001, but I didn't have the zones loaded on this page. And, well, look what happened. Typically, I will get at least 2 points away from a zone before I'll go long, or I'll get 2 points below before I'll go short. So the fact that I didn't do such a great job on the alerts, the zones still did their job, because price went from the zone at 99 down to 87, which is 12. So we go 12, 24, 36, 48. I realized that right here we came like a point shy of hitting the zone, 4 ticks I think it was. We got to 98 by 2 ticks. We missed it by 2 ticks. So 12 down. Let's just call it 10, 20, 30. It's 40 S&P points, zone to zone to zone to zone. Now, we had similar action over here. Okay, and now today, price attempted to go to the zone below, but you know what? There was just so much bullishness in the air, it couldn't get there. Now, if you look left, follow the crosshair on my cursor to the left, over here, and then look at the lows over here. That's what happened. However, if you were trying to get short, coming off the zone, well, things worked out okay. You were able to get your points. The Concierge Trade Alert for last night was to be long above 2004, and so far we've made it up to 2017. And so if you got your Concierge Trade Alerts last night, and if you put on a trade to be long 2004, and you didn't mess with it, you picked up 13 points in the S&P. That's a nice day, you know. I'll take that any day. All right, let's go to bonds. Bonds, we said to be short below 159.11. The first move down gave us like 6 ticks. And then there's 19. Remember, important prices, important areas, almost always tested. Then we go back up, come back down. There's 13, which extends into 21, which extends into maybe 24, 25. Okay? So lots of good movement on the bonds. Crude oil. We said to consider being long above 46.50. And so early on in the evening, we were able to get our daily goal, which is 10 ticks, because crude pays 10 ticks. Now the bonds, 31.25 per tick, you only need 4. Here you need 10. This first move gave 11. Okay? And then this move on the downside, 45.75, gave 13, but we only need 10. And then important price, important area, boom, 52 ticks, but we only need 10. And then a trigger on the long side that gave up 37. Okay, so crude was very kind. Let's go to the euro. Okay, now I do weekly trading zones on the euro as well. It hasn't obeyed, and usually doesn't obey quite as well as the S&P, but it has its days. So this goes back to the Sunday night Globex Open. We go from zone almost down to the zone. We get down to 11,355. So we miss it by 5 ticks. So from 11,410 to 11,355. So that would be 45. That would be 55 ticks. 55 times 1250 would be 687.50 per contract. If you got short here and you got out at the exact swing low, which you probably can't, right? But you can get stopped out along the way with some profit, and we had a Concierge Trade Alert there as well. And so, back to the zone, and now we attempt to go lower, but again, look left, you see where we run into the turbulence there? That'll happen. And then from this zone, we launch and make a beautiful run to the zone. First we have 22, then we have 48. This zone-to-zone run is 415 to 460. So what is that? 50? No, 45. That's 45 ticks times 1250, or 48. I think I measured it. $600. Okay. Now let's get up to today. Today we said let me make sure I'm looking at the right numbers. Today on the euro, short below 11,450. Okay, so the first move down. And so, by the way, yesterday the euro, that move was good for $1,000 per contract. Okay, 85 ticks. That's if you hung in all the way, and I don't suspect anybody would, but if you did, that was your reward. Today, be short below 11,450. Now, we only need 8 ticks because the euro pays 12.50 per tick. First swing low is 11,435, so that's 15 ticks. And then we get another drop here that's worth 12 ticks. We only need 8, remember? And we get the big drop, okay? And the big drop took us all the way down to 11,372. So let's say it was 370. That would be 80 ticks. Okay, that's almost $1,000 per contract. Let's see, 80 times 1250. Yeah, it's $1,000 per contract. Okay, but I think we came just shy of 80 ticks. Yeah. We were 2 ticks shy. So I'll just put that right on here. 2 ticks shy. 2, count them, 2 ticks shy of 1K per contract. That's if you wrote it all the way down. Okay? And got out at the exact swing low. Basically, I'm showing you what the market made available. Price rallies back up to the zone, consolidates for an hour. Now it's trying to put in a leg on the way back down. So that's what the market does. Leg and a retrace, a leg and a retrace. And so now it's going to attempt to put in a leg. And if we've run out of steam to the downside, we won't get a lower low. If we get a lower low, then we'll expect another leg, and we keep expecting another leg till we don't get another leg. Then we look to see if it's a retracement, a deeper retracement, or the beginning of a reversal. Once you can identify that, no chart can hold you back. Okay? Trading's not easy, but it can be simple once you understand some sort of basic your thoughts on looking at weekly trading zones for the bonds. I have done zones for the bonds in the past, Jeff. I could do them again, but I don't want to do more than 4 markets because it takes up most of my entire Sunday evening away from my family. So for a while there, I was doing like 5, 6, 7 different markets, and I would start it as soon as the markets open. I would start, and then I would not get done until like 2 a.m. in the morning. And so If enough people said we'd really like to have weekly zones in bonds, I would consider switching out maybe the euro or the Dow. Okay. Do I have higher zones on the ES? That's a great question, and yes, I do. On the ES, we're coming up on the 1920 weekly zone. Above that, I've got one more zone, 2034/2035. Okay, I'll go ahead and just put that on here. 2034, 2035, 3435, okay? All right, so, and on the downside, I mean, if things were to start to fall apart, we have one more zone on the downside, and that one is 64, 65. 65 and 64. Okay. All right. So back to, thanks for the question. You're welcome, Alan. Next would be soybeans. We said to be long above 914, just like yesterday. And we got a swing high of 1575. Okay. That's 7 ticks, not 8. Takes 8 ticks to make our daily goal. On the downside, which was the first trigger, short below 910, okay, and at 908, that's your points for the day. You know, if you're just trading the 2420 blueprint, looking to make that $100 per contract per day, you were done on this trade at 7 a.m. Eastern. Now we've had a bigger move to the downside, short below 910, and we've actually put in a swing low at 904. So that's right there over this 2-hour period of time, less than 2 hours, $600 per contract. That's if you got out right at the, last tick. And again, the best we can do is help you learn how to trail a stop and or put a hard target out there, or the best of both worlds, a combination of the two. Okay. After soybeans, what do we have? We've already covered the bonds, we've covered the ES, the Dow. I haven't marked up the Dow. I need to get through here pretty quick. When I do the recap later, I promise you I will get the Dow in there, okay? So just look on the Google Plus page. Just real quick, I want to show you the Russell, and then I gotta go. 63.64. See, we had a zone here at 41.42. Then we had a zone at 51.52. And now we've got the next zone at 63.64. Okay? Above that is 70.71. Above that is 84.85. Now, our alert today, okay, the free trade that we gave away on the website to be short below 1134. In the hour it triggered, it made $350 per contract available. We've put in a swing high. The trade also said to consider being long above 1129. Oh no, the free trade and the concierge. Oh, you know what? They were different today. On Monday and Sunday night and Monday, or Sunday night and Tuesday, I used Concierge Trade Alerts, but I did something a little different today. And so let me just show you. Okay. It was to be short below 34 or long above 48. Now that was the free trade. And so getting long above 48, right, 48. We'll call that 48. All right. Swing high is 60. So that's $1,200 per contract. I'll cover this more in depth when I do just the recap video. So you had 350 on the short side, you had $1,200 on the long side per contract. Okay. Gold, the first trigger was on the long side, $470 per contract. That was the potential that the market made available. $810 per contract on the short side, $340 per contract on the long side, and now we're attempting to trigger on the short side. Okay, so that's a quick run through all of the markets. I will come back and do about a 15-minute video this afternoon, and I'll really hone in on the Concierge Trade Alerts last night, and we'll talk more about that free trade tonight and why it differed somewhat from the Concierge Trade Alert. Okay, and if you check the cfrn.net/free-emini-trades-countdown page this afternoon, you'll find out when the next free trade will be available. Okay, again, today 350 on the short side, 1,200 on the long side per contract. That's free. Didn't cost anybody anything. All you had to do was sign up. If you want to sign up, go to CFRN.net. CFRN.net. Free Emini trades. Okay. Get yourself signed up right here. That gets the ball rolling. But if you've already seen enough and heard enough and you just want to jump in and get, because this is going to give you 3 to 5 trades per week. If you'd rather have 8 markets every night, 2 trades per market, 5 days a week, then go ahead and just become a client. We got a great special going on. Partner workshop tonight. This afternoon would be a great time to become a partner or a concierge client, because not only will you get tonight's alerts tonight, all 8 markets, you won't have to wait for the free one. You'll also be able to be in the workshop, ask questions, download the platform, install the indicators. I mean, once you become a partner, you own the indicator set for life, okay? And you have access over the 90-day mentoring period. You have unlimited access to Michael and I for as much personal mentoring as you need, okay? Just send an email to support@cfrn.net. Guys, I'm ready to become a partner. I'm ready to become a concierge client. Or we have a special right now. For a ridiculously low price, you can become both. Two traders in one. So, with that, I got to bid you adieu. I'll leave you with the big S&P chart. How about that? This guy. All right, we just took out the... Okay, that's right. We're reaching up. I didn't put that zone over here yet. 2019. $2020. $2019. Okay. So we're closing in the swing high there so far. 2018. Okay. All right. I'll see you all tonight in the partners meeting. For those of you that are partners, if you want to become a partner, again, email support@cfrn.net or call us 949-42-EMINI. Be happy to discuss it with you and see if it's a right fit. Okay? All right, guys. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.